Everyone, a minute to go until the start of cash equity trading of Francis Lacroix here in London, and here are your top stories. Credit Suisse holds its first AGM since the UBS takeover. The S&B says the lender risked imminent bankruptcy without the deal. We're live in Zurich, where we'll shortly be speaking with a shareholder representative in both banks. The Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. Plus, French skincare giant L'Oréal will buy luxury cosmetics brand Aesop in a $2.5 billion deal, adding high-end creams and lotions to its stable of products. So let's take a look at the futures. A lot of the focus, of course, is on some of the data coming out later. A lot of the focus is on UBS, tomorrow's AGM, and today it's Credit Suisse. European stocks for the moment are posting small gains. Also, Treasury yields actually holding on to declines. Investors really weighing some of the weak factory data that we got against inflation concerns from OPEC's plus plan to cut oil output. So as equities are opening and they're stabilizing, you can see the FTSE actually gaining 0.2%. We're probably seeing similar gains, very tentative gains across the board. Commodities is really the one to watch out for. We have a great story on the Bloomberg terminal, one on a big take about ADNOC, the chief executive there taking over COP28, what he's planning to do also with oil and the transition towards a greener economy. And the other stories, of course, how this was Saudi Arabia, because the OPEC plus production cut, trying to go after the shorts in the oil market. Germany opening up, but France, we're also seeing similar gains for the CAC 40, again between 0.4 and 0.6%. The picture overall, so we look at currencies, we also look at treasuries, the US Treasury, 10-year 3.43, and then you can see Brent crude 85.47. So we'll have a close look at what all of these markets tell us about the future pricing of Fed hikes on the back of oil rising. Of course, the Credit Suisse drama continues with the lender holding its AGM today. It's an opportunity for shareholders to speak directly to the board. It comes as the Swiss National Bank Vice President Martin Schlegel admits that if UBS had not taken over Credit Suisse, it would have gone bankrupt the next trading day and caused a global financial crisis. Now, for more on all of this, we're joined by Bloomberg's Oliver Crick in Zurich. Ollie, good morning. So what does today actually look like?
So, Francine, if I'm a little bit distracted, it's because half a boat that's been sawed in half with Credit Suisse written across the front has just been brought here, and there are some, protesters. So we're here at the AGM. This is the first time shareholders will be speaking to the board in person in 4 years, and they have a lot to say. If you're a shareholder since the last AGM that was in person, that was April 26th of 2019, you're out 93%. And right now, you have a very strange sensation here with the shareholders. They just opened the doors here. I don't know if we can show this, but this is being set up right now as we speak. The protests outside of the thing. Again, and as we see people walking in, there's a lot of displeasure over what has happened here. This AGM is going to kick off in about an hour and a half, where we hear first from the chairman, then the CEO, and then it opens the floor. It's going to be shareholders speaking, asking questions, and making statements. So certainly a lot to pay attention to.
So, and these are small and, of course, big shareholders. What's their focus going to be like, Ollie?
That's right. So you have the small shareholders, the big shareholders. We'll speak to a representative for some of the big shareholders in about 30 minutes' time. And really the focus, I think, is going to be, was there any other alternative to this? And also just airing not just whatever happened in the last 3 weeks, but what happened over the last 4 years, and trying to get answers from that. There's going to be a few votes as well. Many of the more contentious votes were already pulled out. But the other thing that's going to be voted on is the board. And the Norges Bank, for example, has said it will not vote to re-elect the chairman. And this is going to be be, a question going forward. How much of that is symbolic? But also, this is the board that is going to oversee the transition and is going to be responsible for making sure that all of the information that investigators need, UBS needs, and shareholders need is fully available.
And of course, then we have the UBS AGM tomorrow. So what do we expect there? Again, sparks will fly.
Sparks will fly, and as this is sort of the farewell for Credit Suisse and really trying to air, grievances that shareholders have, tomorrow at UBS, it's really forward-looking. What does this bank look like going forward? Armadi has been brought in. Is he the right man for the job? There's going to be a ton of questions from shareholders, and really there's a lot that these shareholders have in common. First of all, many of them have shares in both the companies, but if you were a Credit Suisse shareholder, you are now a UBS shareholder very soon. And obviously, the same issue is there. These shareholders were not consulted. They were not put to a vote. So all of this is going to be kind of, a major question going forward. Job cuts, what are they going to spin off? What is the vision for this business? That is all about, UBS tomorrow.
Ollie, thank you so much. Oliver Crook there, of course, in front of the AGM of Credit Suisse. Now, we'll also be speaking with the Ethos Foundation Chief Executive Officer, Vincent Kaufmann, in about 25 minutes ahead of the Credit Suisse AGM later. Ethos represents Swiss pension funds with significant holdings in the bank. Now, the Fed Governor, Lisa Cook, says she sees U.S. inflation easing, but price pressures could keep coming from a tight labor market.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is I think it's in process. It's in train. We're not there yet.
Over in Europe, and the ECB's Holtzman says a 50 basis point hike is still in the cards for May. Now, joining us now is Sharon Bell, Senior European Strategist at Goldman Sachs. Sharon, as always, thank you so much for joining us. I'm so excited also to have you in person. Today's a big day, certainly for the banks. What's the read across between the OPEC production cuts and what we see with the banks on how much more central banks need to do?
Well, I guess the OPEC production cuts just push up energy prices a bit again. And of course, we're getting this great windfall at the moment from lower energy prices that we've been benefiting from so far this year. That's brought inflation down a little bit. But I think this OPEC cut will again bring into the fore the fact that inflation's not completely dead. Core inflation remains sticky and high, and even though headline inflation has come down, there are dangers. And oil is still a very tight market, as we've seen in the last couple of days.
But Sharon, if you look at the reasoning behind this, so is this because they expect demand to collapse, and so they're preempting to try and defend prices, or is it really to squeeze the shorts?
I think it's to squeeze the shorts more, just because I feel that you've seen the oil price being quite weak in the last couple of months. And I think a lot of producers will say that's odd because actually demand out there is quite strong. So I think it's a function of trying to secure their position. And the position is quite strong at the moment.
Is there anything that you worry about, now, I don't know whether it's shadow banking or liquidity concerns. I know we'll talk about commercial real estate in a second. But is there something that could turn ugly that the market hasn't really latched onto yet?
I mean, it's so tricky, isn't it? We've had such a sharp rise in interest rates in the last year, and we know that things are going to break. There are going to be problems. We've seen it a couple of times now already. We've seen it in the US with the regional banks. We saw it in the UK with the pensions and the RDI. So I think there will be other things. It's really just a case of how markets and economies react to those. They won't necessarily be systemic as they were in, say, the financial crisis.
So do you see something snowballing? Again, if something breaks, is now a good time to get into stocks?
I think I feel mixed on the view on stock markets because I don't think they're the worst asset class to own in this type of environment. They protect you a bit against inflation. You've got energy shares in there, for example, so it's not the worst type of environment to own. But equally, stock prices, particularly for the US market, aren't especially cheap either. The US S&P trades on 18 times. It's above its 20-year average at a time when we're talking about oil prices higher, inflationary risks, still higher potential interest rates, and slightly slower growth.
So if they're priced to perfection, is there anywhere else that you see as better value?
Yeah, I think there's various things you can do. You can go up in quality, I guess, within the credit market, within the equity market. You can look for things with good balance sheets. You can look for areas with pricing power. We've seen that today in the M&A that L'Oreal is doing. It's got market position, so it can consider. It's got a good balance sheet. It can look at, making acquisitions. And I think that sort of company which is in a better position to maintain margins, to maintain its good balance sheet, to grow in an environment of slightly slower growth.
So what, if you're a winning company, you'll do better, but I guess if you're already struggling, you're just going to do worse and worse?
Yes, it really does. Any type of downturn, and particularly a recession. We're not forecasting a recession, but just slower economic growth and higher interest rates, it really splits the market between the winners and losers.
So if you look at the industry groups that you like, and again, you know, within the industry groups, there are winners and losers, but there are obvious winners.
Yeah, I think there are, in the sense that there are areas like healthcare, for example, like some of the better quality tech companies, which I think have got good balance sheets. They can sort of get through this period of slower economic growth and grow a little bit through the period. I also think the energy stocks as well. They haven't worked well this year so far until very, very recently. But I think they too are in a good position. They are buying back shares, they're paying dividends, they give investors a good shareholder return, and they protect you a bit against inflationary risk and this risk that we get from energy markets being very tight.
Sharon, how difficult will the earnings season be? Is that where you kind of, you know, you explain it beautifully, like the difference between industries and also the winners and losers. Is that going to be obvious in the next earnings season?
Yeah, I think it's a tricky one because I don't think the next earnings season is going to be super weak. We don't see the first quarter as being recessionary. If you look at Europe or the US, you probably will have expanded a little bit in the first quarter. China as well, coming out of its lockdown and reopening in that first quarter. So all those things mean that we don't think the first quarter earnings season will be really a bad season. I just think that you will start to see some of those pressures. You will start to see companies talking about how do we pass on higher costs when consumers are a bit more squeezed.
UK assets, any value?
In the UK, did you say?
In the UK, yeah.
Yeah, and lots of value. Of course, lots of risk as well with the UK. And I think the concern with the UK is it's probably the economy which is closest to a recession in our view. It's sort of flirting with recession, I would say, this year. Each quarter growth is going to be close to zero. And the reason for that is, of course, that you've seen higher interest rates in the UK, and the UK economy is very sensitive to those given the mortgage market in the UK. So yes, that being said, I do think there's lots of value in some of the big cap UK stocks, energy names, even some of the banks.
Okay, Sharon, thank you so much. Sharon Bell, Senior European Strategist at Goldman Sachs, stays with us, and I think we're going to talk about commercial real estate next. Coming up, L'Oréal has agreed to acquire cult skincare brand Aesop. We'll have plenty more on that next, and this is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media. And it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
Okay. All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
From New York City.
In London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Welcome back to the Open, everyone. 13 minutes into the European trading day. For the moment, you can see gains across the board with the European stocks gaining 0.3%. Now back with us, Sharon Bell, Senior European Strategist at Goldman Sachs. Sharon, thank you so much for sticking around. You have a great note actually looking at commercial real estate, the thing everyone's worrying about after some of the banks actually fell. How big of a problem will this be in Europe?
I think it will be a little bit of a problem in Europe. You can't have this much interest rate rises without seeing some hit to certain sectors. And the real estate sector tends to be a levered sector. That being said, real estate stocks in the equity market have already close to halved in the last year. So I would argue a lot of that is valued in the price of real estate companies. I also think the concerns will be greater for me in the US than they are in Europe.
And this is because people just haven't gone back to work after COVID?
Yeah, more so in the US actually than in Europe. Occupancy rates in the US, in big cities, in office buildings are around half of what they would have been pre-pandemic. So that change in occupancy has actually been much bigger in the US than it has been in Europe.
So again, is this a story of two halves? I think we were speaking to the chief executive of Brookfield in saying, you know, if you have a desirable location where people want to come and work, then that's going to be fully subscribed, like fully occupied, and then the others will just not. So it doesn't even make sense for, you know, some of the financing to go through this.
Yeah, I do think there is a sort of difference between the highest quality buildings and the best locations, etc. They do tend to hold their value. They do tend to have quality relative to others. But I think there's also sort of an industry-wide situation. You've got lower lending now, you've got more tight credit conditions, and you've got lower occupancy across the board. So I think all of those adjustments are starting to be realised by the market.
Is the market pricing in a credit crunch?
Yeah, not a severe one, not like the financial crisis, where you really did have a huge credit crunch and the impact on GDP was much larger than the one we expect now. We expect to be much more modest, take about 0.5% of GDP in Europe and the US, which sounds really small, but given, say, trend growth in Europe is only about slightly over 1%, that's still quite a big hit to GDP and to growth. And the market is starting to price a little bit of that in. You've seen that with the volatility in banks. I mentioned the halving of prices in the real estate sector. So absolutely, yes, some of it's being priced in, but not a complete credit crunch.
Yeah, what's a policy mistake look like in this kind of environment? Do central banks need to go a little bit easier and see what happens until the end of the year instead of the market cuts that the market is pricing in?
And it is easy, isn't it, to say that there could be a policy mistake here, but, you know, I do feel sorry for the central bankers right now.
I do.
Because it is a tough job. And, you know, they've got to control prices and inflation, and there's a lot of uncertainty around that. And inflation has stayed sticky and high, and service sector inflation is the part of inflation that remains high. Wages are high. The employment market is strong. So really, if it weren't for the problems in the banking sector and the real estate sector, you probably would be hiking a lot more from here to get to a peak. We do think central banks will hike a little bit more. We have taken out, I think, 25 basis points from both our ECB and our Fed forecast to reflect the tightening, let's say, in lending conditions. We do think there are more hikes to come, but just a little bit more. We think they're not far off a peak, and then they will pause for a while.
I do feel like, you know, central banks, damned if you do, damned if you don't.
Yeah.
At some point, the Fed will have to make a call on whether they really want to crush the economy to get to 2% target. Do you think they'll hover around 3.5, maybe even 4?
Yeah, they definitely don't want to crush the economy, because unfortunately you crush the economy and then you don't reach your 2% target, you go down even lower. So you don't want to achieve that. Of course they want price stability, which, you know, they're looking for around 2, maybe a little bit above that over time. And they certainly don't want to crush the economy. We don't think that they will need to. We think that they will raise rates a couple more times. Small hikes though, not the old 50 or 100 basis point hikes, more like 25. Be a bit more cautious, get to a peak and then hold that for a period of time. And maybe rate cuts, modest rate cuts in 2024.
Sharon, thank you so much, as always, for joining us. Sharon Bell, their Senior European Strategist at Goldman Sachs. Now let's get straight to the Bloomberg Business Flash. Here's Jen Zabazasha. Hi, Jen.
Hi, Fran. Thanks. Australia has banned TikTok from government-issued devices, joining a growing list of nations concerned about security threats from the Chinese-owned app. Australia's Attorney General says he's acting on advice from intelligence and security agencies. TikTok's parent company, ByteDance, has denied the app poses any security risk. Also, Bloomberg has learned that HBO is close to a deal for a Harry Potter TV series based on the 7 books by J.K. Rowling. It's hoped the series will be a cornerstone of a new streaming strategy to be announced next week by parent company Warner Brothers. The 8 Potter films generated worldwide ticket sales of more than $7.7 billion. And finally, China Evergrande has entered into restructuring support agreements with a group of its creditors. According to a Hong Kong exchange filing, the creditor group holds over 55% of the property developer's dollar notes. The agreement allows them to swap their holdings for new 10 to 12-year notes or opt for a combination of new debt and equity instruments. And that is your Bloomberg Business Flash. I'm Jennifer Zabasaja. Fran?
Jen, thank you so much. Jen Zabasaja in London. Now, coming up, as the first quarter of 2023 ends, we find out what companies you should be watching over the next 3 months. That's next, and this is Bloomberg. So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open, everyone. 21 minutes into the European trading day. For the moment, you can see stocks actually gaining 0.3%. The FTSE gaining 0.4%. It's very clear that yields also holding on to some of the declines. Yields, for example, the 2-year Treasury yield steady around 3.97% today after being the center of the action in U.S. hours yesterday when they swung from sharp gains to close lower. Now, sneakers, lipstick, and wind turbines, they all have one thing in common. The companies that make these are all on Bloomberg Intelligence watch list for the upcoming quarter. Now, for more on this, we're joined by Tim Craighead, Director of Research at Bloomberg Intelligence. Tim, great to have you on today. So why have you selected these companies?
So this is a bottom-up list that has 3 pillars to it. Number one, high conviction view. Number two, differentiated versus conventional wisdom. And number three, catalyst ahead in the second quarter that our analysts think can change market perceptions. It's a subset of the broader list of focus ideas, as we call them, and you can find them on the terminal, BI Focus.
BI Focus, there you go.
Little pitch there. But yeah, it's a great bottom-up list. It has nothing to do with like the strategy work that I'm normally talking to you about. It's quite exciting.
I love this because it's like, you know, a deep investigation to some of the companies that could really, you know, rock your world. And you've picked 3 actually in Europe, or 10 companies, 3 are European, and it's BBVA, Capgemini, and Vestas. Very different companies.
Very much so. And you might think a bank at this point,
yeah.
But BBVA has a couple of interesting things going on. For example, number one, big Mexican business where loan growth is quite good. Secondly, a big Spanish business where there's a net interest margin story with higher interest rates. And thirdly, the market is fixated on Turkey, which is now a pretty small part of BBVA. We think it's set to surprise overall in upcoming earnings. Capgemini, really well positioned for big tech transformations at companies, going into cloud, going into digital. It's not so cyclical oriented. And Vestas, I mean, it's wind turbines, it's energy transition that's being boosted by both European and US spending. We think orders will surprise on the upside.
So how much of it is also US companies benefiting from China's reopening?
Well, there's definitely a China reopening story here, but actually I'd shift your eyes to the 2 Asian companies that are there. You've got AIA, which is a big insurance company, and you've got Hong Kong exchanges. AIA, you think insurance, what's the deal? But mainland travelers come to Hong Kong and they do offshore investing through insurance policies. AIA is a key player there, and all of that dried up with the pandemic. It's now reaccelerating. And Hong Kong exchange, stock exchange there, think IPOs, think things like tech coming from US back to China and Hong Kong. Think Alibaba splitting up into 6 groups that may all IPO. That's a really interesting catalyst for Hong Kong exchanges.
But yeah, because they're not going to IPO in the US, right? So a lot of these companies will have to IPO elsewhere, so Hong Kong, but that's also a smaller pool of capital.
Yeah, well, there is a repatriation story coming with you know, a number of U.S. listed Chinese companies, and you know, like London is a you know, a hub for all of Europe. Hong Kong is an accessible hub for not only Asia. Going into Hong Kong is an interesting market, but don't forget there's the northbound and southbound connect, which is the one way that non-Chinese investors can get access into mainland Chinese shares. And so, you know, it is very much of a hub for investing.
Tim, what else are you looking at? So amongst the main themes, and I know we you know, frequently talk offline also, we talked about defense last week. Is there anything else in terms of themes that the market is not quite latched onto?
Yeah, I mean, another set of the companies here are US-oriented consumer ideas. And you think, okay, there's both positive and negative stories here. On the positive, you've got companies like Ulta, which is a beauty shop. And you think returning to office, people want to look nice, they're going out more, and there's an ongoing positive story there we think is still underappreciated. Gap Stores is going through a restructuring. And on the flip side, you've got Casey's, which you've probably never heard of. It's a convenience store in the US. That's more oriented and exposed to just the broad economic trend. And there we see, you know, the risk of trading down playing not into Casey's favor. So it's an interesting thing. You think Gap Stores, but that restructuring can really move it ahead. And it's at only $3 billion in market cap versus Casey's where there's disappointment.
Tim, thank you so much. Tim Craighead there with some of the main stocks to watch. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Credit Suisse holds its first AGM since the UBS takeover. The S&B says lender risked imminent bankruptcy without the deal. We're live in Zurich, where we'll shortly be speaking with a shareholder representative in both banks. Now, the Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. European stocks climb. Plus, French skincare giant L'Oréal will buy luxury cosmetics brand Aesop in a $2.5 billion deal, adding high-end creams and lotions to its stable of products. This is a picture for the markets. Overall, we have a great story, of course, on what happened with oil and the fact that Saudi Arabia probably tried to squeeze some of the short sellers. That's repricing bonds and equities. We had a lot of action when it came to the U.S. 2-year yesterday. European stocks for the moment gaining some 0.3%. We also look at the banks. The drama of Swiss banking continues as Credit Suisse holds its AGM today. Tomorrow, it's the turn of UBS. Well, we're now joined by Bloomberg's Oliver Crick in Zurich with a shareholder. Hi, Ollie.
That's right, Francine. We're joined by Vincent Kaufmann. He's CEO of the Ethos Foundation. They are a proxy for shareholders in the Swiss pension fund system, representing about 3 to 5% of both Credit Suisse and UBS, and we're joined now by Vincent. Vincent, thanks so much for joining us today. We're standing here outside of the AGM for a company that will not exist in a couple months. What do you hope to get from the AGM today?
Some answers. Since 2 weeks and the announcement of this acquisition, I think we went through a lot of questions like who should bear the responsibility for the situation in which we are. Multiple causes, of course, but one question is the board doing its job now to look for potential responsibility over the past years?
And for you, what is a good outcome? What would be a good outcome of today?
I think, first of all, some of the board members, which have been serving for more than 2 years, which have a responsibility in some of the scandals we have faced, should not be re-elected, because those people have not the objectivity in the independence to potentially inquire regarding the situation. So we need independence in the board, so not re-electing part of the board member.
And so what information do you think is important for shareholders to leave that building with today?
Yeah, first of all, what kind of information the board had when they accepted the deal valuing Credit Suisse at 3.25 billion, which is 7% of the shareholder equity at year end. And if you factor the fact that the AT1 bonds for 16 billion now have been written off, actually the equity of Credit Suisse were more closer to the 60 billion. And UBS is buying that for 3.25 billion. So what kind of information had the board to accept such a low-value deal.
And if you have that information, do you think that information would be useful in contesting the value of that deal?
That's all about it, because we have still the right, based on the Merger Act, Article 105, to contest the fairness of the deal. And normally with the law, we should have had an audit opinion and a fairness opinion. Of course, now the Federal Council intervened, changed the law, but they didn't actually remove the Article 105, which allows shareholders to contest the equity, the value, the fair value actually of the deal.
And then are there any other avenues for shareholders to be compensated? What do you think is the best shot, if there are any?
I guess looking for past compensation and variable compensation paid to former board members. If there were to be some additional clawback to activate, because currently it's only the bonus 2020 and 2021 which are concerned, but there is more kind of deferred bonus which should be clawbacked, I guess, from former management.
And then in terms of this investigation that's underway, what about the deal itself? What do you think? What do you hope that clarifies?
We will see. We will see. I guess one of the key question is the financial situation of the bank at the time of negotiation, and what the Federal Council knew to remove important shareholder rights, such as the voting right. Normally, we should have voted on this deal as shareholder of both UBS and Credit Suisse. Yeah. So what kind of information had the Federal Council? And you have looked at taking some legal action yourself. You said it's fairly complicated. Do you have an update on that at all? It's still very complicated. We expect the board to do it first. It is part of their liability, their actually duty, but their duty is also to look for responsibility and to protect potentially shareholders. And what has this whole fiasco cost the Swiss pension system? We made some roughly estimate. If you factor that Swiss pension fund invests 10% of their asset into Swiss equities, then Credit Suisse was as end of February about 0.65% of the Swiss performance index, and at the date of end of March it was 0.20. So it's roughly 500 million that we've lost, that the pension fund have lost between end of February and mid-March. And so casting our minds forward to tomorrow, the UBS shareholder meeting, you will be present as well. What do we need? What do shareholders? What do you want to hear from UBS tomorrow? I think they will manage some concentration of risk, because if you look at both banks combined in the Swiss market, they will have some, like in the Geneva region, they will have 50% of the mortgage loans, which is a huge risk. So as a UBS shareholder, we would like the bank to address those kind of risks. And I believe, also for the interest of the Swiss economy and the fair competition, the board of UBS should consider a split and a spin-off of some activities of Credit Suisse at a later stage. It would be in the interest of UBS shareholders to have smaller entities that would be much more manageable and potentially avoid some execution risk into the merger, at least for the Swiss entities. And you've mentioned some sort of 5 points of worry. This is sort of some of them. Are there other points of worry that you have from this merger? Yeah, of course, a fair competition. For Swiss pension fund, it's key to have a different provider. If you combine both UBS and Credit Suisse in terms of custody, in the Swiss market for pension fund is about 50% of the market share. So it's huge, and it's a pricing power which is not good for the market. So we expect antitrust authority to come back at one point and challenge those kind of positions. Of course, there is also the exposure of UBS in terms of fossil asset, because they will get back some of those activities from Credit Suisse. Credit Suisse has quite a portfolio in the fossil asset. And of course, we fear an inflation of compensation. Because if Mr. Ermotti comes back, certainly he has some willingness to increase his compensation, because he will be at the head of the 12th largest bank in the world. And so this is another distinction. You say, this deal could be very good for UBS. It may not be as good for UBS shareholders. Draw that distinction a little bit for us. Yeah, because I guess management which manage a larger company can always leverage its own compensation. That's what we see. There is a correlation between compensation and the size of a company. But for shareholders, and you see it now with Novartis spin-offing Sando, or those kind of ABB as well, conglomerate, which is spin-offing a lot of division, because shareholders prefer having smaller companies and manage the assets themselves. And tomorrow, how important is an assurance on the dividend for you? We don't really count on the dividend. I think for the coming year, we expect a lot of investment in terms of restructuration. Of course, it's important to have a fair dividend, but I think most important currently with the financial situation is to have stronger equity in the bank.
And a final question, is Ermati the right person for the job?
We hope, yes. We hope because he has this experience of restructuring the investment bank. He did a good job between 2011 and 2020 at UBS. I think they really downsized the IB of UBS, so he did it well. He has a good confidence of the key people in UBS and for the board. He's a Swiss citizen, and I guess that played a role for the government. So no, I think he has all the cards in his hand to do something good.
Great. Vincent, thank you so much. That was Vincent Kaufmann, the Ethos Foundation CEO here at the Credit Suisse AGM, where you can hear the protesters outside.
Yeah, they're getting rowdy. Ollie, thanks so much. Ollie Crook, they're outside Credit Suisse AGM. Coming up, NATO foreign ministers are meeting in Brussels today in a meeting which will see Finland joining the group. We'll get the latest on that shortly. And this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 41 minutes into the European trading day. For the moment, we're holding strong, not as high as we were about 15 minutes ago. Stocks are now getting 0.2%. They were earlier 0.5% higher. Now, the Reserve Bank of Australia has paused its most aggressive tightening cycle since 1989. The Aussie Central Bank says it's keeping its options open and some further tightening may be needed. Well, joining us now for more on this is Bloomberg's MLive Eddie van der Veld. Eddie, thank you so much for joining us. How are the markets actually reacting to the RBA?
Yeah, no, I mean, it's a little bit of a surprise. We have seen a reaction in the markets. I think, markets are still very much worried about inflation. And so I think the fact that central bankers are, that the RBA stayed unchanged does show us that there is still work to be done, and that the latest shock in banking hasn't completely dissipated from the market.
So what does that mean? I mean, going forward, does it just show you that the market is very, very edgy, especially on the back of that OPEC plus production cut decision?
Yeah, I do think the market is edgy, and look, I think it's a difficult balance for central bankers and for markets to strike, because on the one hand, we are starting to see strains in the global economy, right? We are starting to see that banks could fail if they push rates too high, too fast. And therefore, we do see action like that from the RBA, which, while they're struggling with inflation, they feel like their hands are a little bit tied. Now, when you see OPEC then reasserting itself in a global market and saying, look, we're not going to stand for oil prices that are too low, that just adds to the difficulty of the equation, I think.
So what are the implications for the price of oil?
So for the price of oil, I think, you know what, I think that OPEC here has shown us that there's a floor below which they don't want prices to fall. But at the same time, if prices rally too much, they're going to provide a cap. So I think this is classic cartel behavior, and it probably takes some of the volatility out of the oil price, rather than being a purely bullish factor for oil.
Yeah, and it basically says to the market that OPEC plus is firmly back in charge.
OPEC is back. OPEC is back. And there's nobody to challenge them at the moment, right? Because when oil prices were above $100 a barrel last year or so, we were expecting to see a lot more shale production coming on stream. That didn't materialize. Now the speculation is that maybe the shale just isn't out there to develop anymore. So there is no challenger to OPEC, and OPEC absolutely back in control of the oil market.
And what does that tell us about inflation? So the read across for inflation, given there's also maybe pricing of a credit crunch, and what it means for central banks.
Yeah. So inflation, I think, I think the inflationary implication here is difficult. We have heard a school that says, okay, oil prices higher, that means higher inflation, that means higher rates for longer. At the same time, though, if we take just this as a price floor and prices don't rally from here for oil, then that means that inflation is not going to be stoked by oil prices. And at the same time, if you take some of the volatility out of the oil market, then it makes it easier to plan. If you're somebody who moves a lot of material, if you're a shipping executive and you move stuff around, you don't have to plan for the volatility of oil, because you know OPEC's going to keep the price somewhere between $80 and maybe $100 a barrel, and that it takes the sting out of inflation, really.
But at the same time, there's China's reopening, which maybe we don't talk about enough. I mean, how does that interplay with all the markets?
Trends. I think the market at the moment is worried for a lot of reasons. I think, but mostly it's worried about the the implications of shocks from higher rates that might feed through into banks, and the market is very worried about more banking collapse. As long as we don't see that in the next few months, then I think I think that's something that the market can cope with.
Okay, Eddie, thank you so much, as always, for joining us. Eddie van der Vaart there with the very latest on the markets. Now let's get straight to the Bloomberg First Word News with Jen Zabazaja. Hi, Jen.
Hi, Fran. NATO is said to be pushing members to pledge a total of 500 million euros a year to help provide Ukraine with non-lethal aid in its war effort. The call by NATO Chief Jens Stoltenberg includes funding for fuel, protective equipment, and anti-drone systems, and comes as foreign ministers meet in Brussels. Finland, meanwhile, will become the 31st member of NATO with a flag-raising ceremony later today. Also, the U.S. military says the suspected Chinese spy balloon shot down in February had gathered intelligence from military sites. NBC News earlier reported that China was able to transmit information from the balloon in real time. But the Pentagon says the military took actions to ensure China gained little value from it. Disney CEO Bob Iger has called Florida Governor Ron DeSantis, quote, anti-business for his policies regarding the theme park giant. Speaking at a shareholder meeting, Iger said companies also have the right to freedom of speech. The world's largest entertainment company has increasingly found itself in a fight with conservatives over its policies and the content of some of its output. And finally, Nigel Lawson, who was Margaret Thatcher's most important chancellor, has died at the age of 91. One of the British Conservative Party's best-known figures. Lawson oversaw the City of London's Big Bang deregulation of financial markets in 1986 and a tax cut-fueled economic boom. A late convert to Euroscepticism, he remained active in politics for nearly half a century, including in the House of Lords, which he attended as recently as last year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Jennifer Zabasaja, and this is Bloomberg. Fran?
Jen, thank you so much. Now, coming up, Donald Trump will appear in court today, where we'll finally hear the charges against the former president. We'll get the details next, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. 50 minutes into the European trading day. The picture across the board, while equities are actually rising, we did have a wobble in the two-year Treasury yield yesterday in the U.S. It was higher and then finished a little bit lower. For the moment, European stocks gaining 0.3%. If you look at some of the moves when it comes to currencies, sterling also the highest since June. Now, this is because of a number of factors. Of course, we did have some data out of the UK. And then the other couple of things that we need to watch out for is a lot of the UK banks warning the watchdog against being the first on the new capital rules. So we'll have plenty more, of course, on that throughout the day. Now, former U.S. President Donald Trump is in New York for his arraignment hearing today. Bloomberg's Simone Foxman brings us the details.
All of New York City is bracing for a historic moment. Former President Donald Trump expected to be arraigned in a downtown courtroom. And at that time, we'll find out exactly what the charges are against him. They are expected to be related to a hush money payment that Michael Cohen, his longtime attorney and fixer, made to porn star Stormy Daniels. But we don't know what other charges may entail, and that's going to help us determine just the gravity of the potential charges at issue. Right now, Now, I stand outside Trump Tower. We did see some protesters, mainly in support of the former president, gathering here, but those were in the dozens. Instead, we saw hundreds of journalists like myself lined up here waiting as Donald Trump moved from LaGuardia Airport and to Trump Tower before heading to the courtroom. All of that and more to come. In New York City, I'm Simone Foxman, Bloomberg News.
That was Simone. Now, the St. Louis Fed President James Bullard says it's not clear what higher oil prices will mean for U.S. monetary policy, although OPEC's decision to cut output was unexpected. Well, Bullard spoke exclusively to Bloomberg's Michael McKee, who began by asking about the Fed's response to the recent regional banking crisis.
I do think that the reaction to the banking problems was swift and was appropriate, and both here in the U.S. and overseas. And so I think, you know, the idea that there are macro-prudential tools that you can use in that kind of situation to calm things down, that seems to have worked so far. You never know if there's further things happening, but if there are, we can react with macro-prudential tools again. And then on the monetary policy side, we can still proceed to fight inflation and get inflation down during 2023 and 2024 back to target. So I think, you know, this idea that you can walk and chew gum at the same time, you've got the macro-prudential tools for financial stress, and you've got monetary policy to fight inflation, and we can do both as long as the financial stress doesn't morph into something much larger. And so far, so good, but knock on wood, you're never sure what's going to be around the corner.
But does $100 oil, or the idea at least of this oil shock, complicate your job?
Yeah, well, of course, oil is always, the oil price is always important. I would have expected somewhat higher oil prices anyway, with China coming back sooner than expected during the first half here of 2023, and with Europe skirting recession. So both of those, and strong data in the U.S., all of those are pretty bullish factors, I would say, for the oil market. This was a surprise, the OPEC decision, but whether it will have a lasting impact, I think, is an open question.
Now, you had already moved up your estimate of where the Fed funds rate needed to be to bring down inflation. You were talking an effective rate of around 5.6%. Does this change that calculation at all? And can you explain why you think we need to go that high to hit the terminal rate?
I think we'll need to get over 5%. The committee says that the median person on the committee says a little over 5%. I'm a little higher than that. I think inflation will be stickier, and you know, I'd look mostly at the core measures of inflation, like PCE, core inflation, or the Dallas Fed trim mean, which really hasn't come down very much at all. It's still in the 4% range, so you know, 4.6 or something like that. So we're still talking about a lot of inflation, more than double our inflation target on that basis. And oil prices fluctuate around. It's hard to track exactly. Some of that might feed into inflation and make our job a little bit more difficult.
St. Louis Fed President Jim Bullard there speaking to our Michael McKee. Now, it's a busy day in Brussels. Bloomberg's Maria Tadeo is at the European Council. Maria, we're expecting a press conference. Also, the Secretary of State, Antony Blinken, of course, going to talk about Ukraine. What is he expected to say?
Yes, Francine, and we're going to get this meeting between the two top diplomats from the United States and the European Union. Obviously, as you say, Ukraine is always top of the agenda, but at the same time, Francine, this is coming off the back of that OPEC decision, and it's related to Russia too, because you talked about it in the show. If you do see oil prices go up, there's implications for Brent, but there's also implications for Russian oil. And remember, Francine, right now there are two caps that are enacted by the European Union. One is on Russian gas, the other one is on Russian oil, and that is set as $60 a barrel. Now, if that goes beyond that, the European Union will have a real problem here enforcing that cap. So this is really something that I expect will be, well, potentially problematic, but also top of the agenda too. I'm
looking forward, of course, to hearing that press conference. Thank you so much, our Bloomberg European correspondent, Maria today. Now that's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup of the bank story, also the AGM of Credit Suisse underway in half an hour. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rating World Cup.
This is a 3.
As the economic picture does.
Is the OK is getting ready to make a decision.
This is Bloomberg Surveillance Early Edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Credit Suisse holds its first AGM since the UBS takeover later this hour, in fact, the first in 4 years. The S&P says the lender risked imminent bankruptcy without the deal. We're live in Zurich. The Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. European stocks are higher, while oil continues to gain on the surprise production cut by OPEC. Plus, Donald Trump arrives in New York for his arraignment, while the former president is said to plead not guilty, while the city is on high alert for the historic proceedings. Now, first thing is first, let's check in on the markets. The focus yesterday was definitely on the U.S. two-year yield. Today, still on the U.S. two-year yield, 3.9924. So again, hovering to that pretty historic 4%. The picture is, of course, a bit of repricing when it comes to production of oil, and that cut that was announced over the weekend, European stocks gaining some 0.2%. Now, there's not a huge difference whether you're sitting in France, in Germany, or elsewhere. Yesterday, we definitely saw a boost to the FTSE 100 because this is an index that's very oil-rich. I don't know whether we have the European map. If we don't, we'll come back to it very shortly. Now, we also have the Secretary of State in Europe. This is Antony Blinken. He is joined in Europe, and we're expecting, this is Mr. Borrell, We're expecting Anthony Blinken to talk shortly. The focus, we understand, will of course be on Ukraine and maybe some of the weapons. And we're also expecting, we know that Mr. Blinken yesterday spoke to Sergei Lavrov of Russia, also about the Wall Street Journal reporter. Now, the Swiss banking drama continues today with the Credit Suisse AGM due to begin in just about half an hour. It will be an opportunity for shareholders to speak directly to the board. It comes as Swiss National Bank Vice President Martin Schlegel says if UBS had not taken over Credit Suisse, it would have gone bankrupt the next trading day. Now, he says that would have likely led to a global financial crisis. Bloomberg's Oliver Crook is in Zurich for us this morning. So, Ollie, what's the mood like on the ground?
Well, Francine, the mood on the ground, as you can probably imagine, is not great. This is the first shareholder meeting where the board and the shareholders will both be in person since 2019. Since April 26, when they held that last meeting, 93% of shareholder value has been completely wiped out. It went from back then to being a $35 billion banking giant to being sold for $3 billion. And that's really what investors will get to, speak to the board about directly in about, as you say, 30 minutes time. We'll hear first from the chairman, then the CEO, and then it opens up to the floor and it's Q&A, it's statements from shareholders, questions from shareholders, and later in the day you'll have some votes as well. And obviously here there's police here. We see some of the protests that have been going on here. This one specifically is for fossil fuels, so perhaps less concerned about shareholder value and more about the planet. But really, it's a major deal here in Switzerland, as you know, Francine, and some shareholders that are really very unhappy.
Yes, what are we expecting? What are they trying to achieve today? Some of these shareholders voicing concern, but can they get money back?
So this is the big question. So obviously there's a sort of the catharsis of this in confronting the board and dealing with the issues of the last 3 weeks and yes, the last 3, 4, 5 years. But also, is there anything that they can salvage from this? So we were speaking to one of the representatives that is representative of the shareholders through the Swiss pension system, Vincent Kaufmann, a little bit earlier. Have a listen to what he said.
Looking for past compensation and variable compensation paid to former board members. If there were to be some additional clawback to activate, because currently it's only the bonus 2020 and 2021 which are concerned, but there is more kind of deferred bonus which should be clawbacked, I guess, from former management.
So two things to look out for, one that bears on the other, the votes. They're voting on whether they're going to re-elect the board. The chairman, the Norges Bank, has come out against the chairman. But this is precisely to what Vincent was talking about. The board that they put in place will be dictating in some ways how the information gets disseminated. And if they want to claw back bonuses, claw back compensation from mismanagement in the past, they will need a board that is totally clean of any of that and doesn't have any is not tainted by it. And that is the focus for Vincent and I suspect other shareholders here today.
Yeah, what can we expect from UBS tomorrow?
Right, and if today is sort of the farewell for Credit Suisse, tomorrow is really the hello and what is the plan here for UBS, because this is not an AGM that they were expecting to have. They have to completely explain what this new business is going to look like. There's the question of job cuts. We've been hearing over the weekend reports on that. Will they spin off certain parts of it? As we were talking to Vincent Kaufmann from Ethos, who's a shareholder in UBS as well, thinks that they really need to spin off parts of the business, partially due to the concentration risk here in Switzerland of too many of these businesses, but also, if UBS is too big, they may act in the interest of the company and the management there, but not necessarily the shareholders. So really, that'll be kind of them coming out and saying, hey, beginning to lay out what the plan is. We know that will take, however, some weeks, if not months, for them to have a full plan on that.
Ollie, thank you so much. Ollie Crook there with the very latest, of course, from the Credit Suisse AGM. Now, Fed Governor Lisa Cook says she sees U.S. inflation easing, but price pressures could keep coming from a tight labor market.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is I think it's in process, it's in train. We're not there yet.
Well, over in Europe, and the ECB's Holtzman says a 50 basis point hike is still in the cards for May. Well, let's bring in Karen Ward, EMEA Chief Market Strategist at JP Morgan Asset Management. Karen, as always, thank you so much for joining us. It's been quite a month. I feel like we lived through a whole decade for the month of March. What's the next thing to fall? I don't know whether there's something that, we talk about commercial real estate as the next thing to break, and whether you see that
Yeah, I mean, certainly the banking sector turmoil is going to have the ripples now. We may be through the banking news, but the ripples through the real economy, that still needs to play out. And as you say, commercial real estate is probably at the forefront of that. And that's going to continue, probably more centered in the US than here in Europe, where we think the ripples will be smaller. So that's critical, but it still comes down to the inflation data, Francine. I mean, if inflation falls very rapidly, then the central banks have all the degrees of freedom to react to whatever news is happening in the real economy. If inflation is sticky and they're constrained, then we're in a very different environment for how they can turn their attention to growth. So to me, it's still all about the inflation data.
Yeah, and I think you're 100% right. I mean, we try and game theory what central banks will do without really knowing what inflation does from here. Do you expect it to almost naturally come down, but then get stuck at between 4 and 5%? And how much will they have to crush the economy to get it down to their target?
Yeah, absolutely. I mean, I think it is on its way down, but it's going to be gradual. And I personally think just that world of low inflation, zero interest rates is thoroughly behind us. That's the biggest thing investors have to get their head around, I think, as we look to the future. I think they will be relatively patient. I personally think that as we go through the coming years and just reassess where we've been, whether that zero inflation, that low interest rate environment, that need to produce all these unconventional tools like QE and forward guidance and all the problems that that's creating them, whether actually shifting ourselves to a higher inflation number and a higher nominal neutral interest rate wouldn't actually be a bad outcome. I don't think they're going to talk about that. Of course, they shouldn't for some time. But overall, I think that a degree of patience in how that inflation rate comes down is probably what we'll see.
Karen, what are the markets getting wrong? So, they're definitely pricing in cuts from the Fed this year. Is that too soon?
It does seem too soon. I mean, I think it comes down to the behavior of the labor market is a big uncertainty through H2. It's possible that actually as demand slows, vacancies dry up and that then moves into job cuts quite quickly. I think it's more likely that given how difficult it's been to find staff, we see a lot of labor hoarding. And therefore the labor market stays pretty tight, which is a double-edged sword because of course it creates resilience in the economy, but it also keeps the inflationary pressure. So I just don't see the economy quickly crumbling, which leads to any of the central banks thinking about cutting in the second half.
So you were talking about the banking crisis, as we haven't maybe felt the ripple effects, but you don't expect it. You don't expect anything to implode.
I think it will be at the margin. Yeah, exactly. I think it will just add to the slowing pressures, but I don't think we have the foundations of the vicious cycle that we usually have. Yeah, exactly. We don't have, I think, the oversupply, the construction, which causes prices to fall, volumes to recede, credit to be pulled in. All of the foundations that gave us the problems in 2008 was not only excess in the financial system, it was excess in the real economy. And I think we don't have the combination of those two. So to me, it's another gradual slowing, adding to the pressures of higher interest rates generally. But I just don't see that vicious cycle and therefore the momentum of the slowdown picking up.
Beautifully put, beautifully explained, Karen. So where do you want to be invested in the markets?
Well, I think, you've just got to be a little bit cautious about risk at the moment, given how far markets have come. I do slightly struggle to square this narrative of the central banks are cutting rates rapidly, and that's good for risk. If the central banks are cutting rates rapidly, something is going horribly wrong in the second half of the year, and therefore I think risk looks overbought. So I do think that we need to focus in the short term on quality, high quality fixed income, quality in stocks, being very balanced. I mean, there's a lot. I think everyone should be humble about what we need to discover in the second half of the year, the ripples of the banking crisis, whether inflation is still going to be a problem or not. So I think keeping balance, particularly outsized positions, I think is the main thing we would advise against.
So would you see, some of these worries pan out in the next earnings season, or does it take longer for
I think it's going to be a slow burn. Yeah, I think it's going to be over the next few quarters, where we're just also still adjusting to what this new pandemic world looks like, the degree of pricing power, the role of the labor market, how much pent-up savings is still there, and then some of these structural changes that are going on. I think it's going to be quite a slow burning.
Is liquidity okay in the markets? I don't know whether there's any black swan that we should be seeing now that we're not really talking about?
Not obviously at the moment. I mean, certainly in periods of stress, you do see that liquidity dry up pretty quickly, but in normal functioning times, as we seem to be back to right now, it seems to be fine. And that's where I think the liquidity provision by the central banks, including some of the new facilities put in place by the Fed, have really, I think, been a game changer in ensuring that this does not become a liquidity problem that turns into a solvency issue.
And Karen, when you talk about growth companies or some of the best companies out there, geographically, is it the UK versus Europe, or do you just have to look for big conglomerates that could also benefit from China reopening?
So I think China's reopening is probably the area which we have most conviction in, because it's not prone to these uncertainties. You know, we're not worrying about whether inflation is persistent and higher interest rates. We're not worrying about the banking situation. So I think I have most conviction on the strength of the earnings profile through the second half of the year in China. With Europe and the US, I think it's a really interesting conversation. It comes down partly to whether you believe this is going to once again be a growth-driven cycle or maybe a more value-driven cycle, because of course, as you were talking to earlier on, European markets are more value-orientated. I personally think this then comes down to that crucial question of, are we going back to that zero interest rate, zero inflation world? If you are, then you want to be getting yourself back in the growth areas of the markets, positioning yourself for the cycle that we've just experienced. I just don't think we are. I think we're in a fundamentally different world, and therefore the losers of the last cycle are going to be the performers, and that's where Europe gets more interesting.
Karen, thank you so much. As always, Karen Ward there, EMEA Chief Market Strategist at JP Morgan Asset Management. Coming up, it's a busy day in Brussels with NATO foreign ministers meeting to discuss energy security, but also the war in Ukraine. We'll have plenty more on that shortly, and this is Bloomberg.
Why'd you do this project?
Yeah, YouTube is this kind of a sleeping giant in social media. Someone described it as like this iceberg that no one ever really talks about as much for a variety of reasons. I see YouTube as both the past and now future of social media, and it was the first company to pay online broadcasters and invented the creator economy. And now we're seeing with TikTok, Instagram, Snapchat, are all moving in this direction. Social media is no longer your friends and family and your acquaintances. It is influencers. It is celebrity. It is a game built around commerce. And this is a world that YouTube very much created.
Should we be telling Odd Lots listeners to like, comment, and subscribe? Other podcasts do that.
I mean, it's an effective call to action.
All right, everyone, like, comment, and subscribe on Odd Lots wherever you find it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Bloomberg has the Fed coverage you're looking for. Wednesday, an exclusive interview with Cleveland Fed President Loretta Mester.
I do believe we have more work to do.
For all your Fed coverage, keep it tuned to Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the EU's Foreign Affairs head, Joseph Borrell, says that the bloc will keep up the, quote, collective pressure on Russia. It comes after the EU leader met with the U.S. Secretary of State, Antony Blinken. So let's get straight to Bloomberg's Maria Tadeo, who's at the European Council. Maria, thank you so much for joining us. So what have we been hearing from the foreign ministers?
Yes, Francine, and the two repeat in this message that they will continue to support Ukraine, but in particular, and you picked up on that comment from Josep Borrell, the top European diplomat, insisting China has a responsibility to mediate, but also use its clout to force Vladimir Putin to de-escalate in his war. Now, Francine, as you know very well, some believe this is completely naive at this point from the European Union. We have not seen China do anything in a year to de-escalate the situation, but nonetheless, this week is important because you have both the head of the European Commission, Ursula von der Leyen, and the French President Emmanuel Macron heading to China to see and speak with Xi. The other important issue of the day, of course, and we are going to be relocating to NATO very soon, is, of course, Finland now finally officially becoming a new member of the alliance. It's been 10 months of back and forth, but today it will come to fruition, and there will be a special ceremony for it. And just what a change in foreign policy for the country. And again, one of those big geopolitical ramifications of the war in Ukraine.
Maria, thank you so much. Our Maria Tadeo, they're our Bloomberg European correspondent with the very latest on Brussels. Let's also get to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The U.S. military says a suspected Chinese spy balloon shot down in February had gathered intelligence from military sites. NBC News earlier reported that China was able to transmit information from the balloon in real time, but the Pentagon says the military took actions to ensure China gained little value from it. Now, Disney CEO Bob Iger has called Florida's Governor Ron DeSantis anti-business for his policies regarding the theme park giant. Speaking at a shareholder meeting, Iger said companies also have the right to the freedom of speech. The world's largest entertainment company has increasingly found itself in a fight with conservatives over its policies and the content of some of its output. Nigel Lawson, who was Margaret Thatcher's most important chancellor, has died aged 91. One of the British Conservative Party's best-known figures, Lawson oversaw the City of London's Big Bang deregulation of financial markets in 1986 and a tax cut-fueled economic boom. A late convert to Euroscepticism, he remained active in politics for nearly half a century, including in the House of Lords, which he attended as recently as last year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg Francine.
Leanne, thank you so much. Coming up, as the first quarter of 2023 ends, we find out what companies you should be watching over the next 3 months. That's next, and this is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation. Those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, sneakers, lipstick, and wind turbines, they all have one thing in common. They're the companies that make these all on Bloomberg Intelligence watch list for the upcoming quarter. Now, for more on all of this, we're joined by Tim Craighead, Director of Research at Bloomberg Intelligence. So, Tim, that didn't come out as it should have. So you basically put a list of the companies to watch, and they're very different, but they have something in common, is that you see value in them.
Absolutely. It's a case where we have an ongoing broad list across Bloomberg Intelligence called Focus Ideas. And these are a combination of a strong fundamental view that we think is differentiated versus the market, and there's catalyst ahead to change the mindset. Now, these 10, as a subset, all have catalysts coming up in the second quarter that we think are particularly important. And you're right, it crosses sectors, it crosses regions. There's 8 that are positive, there's 2 that are negative. So yeah, it's an interesting bottom-up mix.
So out of the 10 companies, 3 of them are in Europe, and you even have a bank, BBVA. Yes,
indeed.
That's bold.
Yeah, these days for sure. And you know, BBVA I think is particularly interesting. Big chunk of the bank is Mexico, and their lending growth is quite robust. A big chunk is Spain, obviously, and there you've got a net interest margin story that continues to improve with higher interest rates. There's a focus from the street on Turkey. That's only 7% of the company now. We don't think it's that big of a deal. All in total, we think we've got positive surprises in earnings. Capgemini, big IT services company focused on strategic transformations, not cyclical businesses. Again, positive surprises we think can come about. And Investos is just right smack in the sights of energy transition, with both European and U.S. spending pushing towards things like wind, and they're a leader.
So, Tim, talk to me a little bit about how China's reopening is actually affecting some of these companies.
Yeah, there's 2 in particular that come out here. One is AIA, which is a big insurance company based in Hong Kong. The second is Hong Kong Exchanges, which is, you know, the local stock exchange. AIA, I think, is interesting because you think insurance company, China reopening, but mainland travelers come to Hong Kong to invest through insurance policies, and that all but dried up during the pandemic. It's now reaccelerating, we think, underappreciated. And Hong Kong Exchanges should see, we think, a pretty robust pipeline of IPOs coming. And then, you know, you have something like Alibaba announcing it's going to split up into 6 components. All of those could list in a combination of potentially Shanghai and Hong Kong.
Tim, thank you so much. As always, Tim Craighead there with a great list, actually, of 10 companies that you should watch. Coming up, the chief executive and chairman of Credit Suisse, due to address shareholders at the lender's final AGM, will, of course, bring you that live next from Zurich. This is Bloomberg.
solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Credit Suisse holds its first AGM since the UBS takeover in a few moments, while the SNB says the lender risked imminent bankruptcy without the deal were live in Zurich. The Reserve Bank of Australia pauses its almost year-long tightening cycle, but warns more hikes may be required. European stocks are higher. Oil continues to gain on the surprise production cut by OPEC. Plus, Donald Trump arrives in New York for his arraignment. The former president is said to plead not guilty, while the city is on high alert for the historic proceedings. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francie Lacqua here in London. Now, we are expecting, of course, to have a couple of speeches from Credit Suisse. Our Ollie Crook is on the ground there at the annual general meeting, which should get started very shortly. Of course, at the crux of all of this is to see who will be in charge to try and maybe renegotiate some of the deals. Also, we've been speaking to a number of shareholders that have been on the ground speaking to Ollie. And of course, this gives us a good indication of maybe some of the rescuers that they're looking to find. So this is a picture across the board. When you look at the Credit Suisse share price, it's incredible to see how much it's lost over the last 3 months. Now, the Credit Suisse chairman saying he is truly sorry for failing to save the bank. We are expecting him, we have been given an advance copy of his speech. We're expecting him, of course, to talk very, very shortly. He basically says he stands here today in a situation that no one could have anticipated. We understand that he will also say this is a sad day. So there are a number of Credit Suisse, of course, headlines crossing the Bloomberg terminal with the chairman saying he's truly sorry for failing to save the bank. I think we can now listen in.
Regarding the inconvenience at check-in, the measures we've taken are meant for your security, and I would like to thank you for your patience. We need to make some formal statements at the beginning of the AGM, and I'll be brief as you are expecting substantial statements. It is important for me to give you time for your questions, your statements. You have the right to do so, and we would like to create the framework for it. I would like to welcome all the members of the Board of Directors and the Executive Board present here today on the podium. From your right, we have Mr. Ulrich Körner, the Chief Executive Officer, Markus Diethelm, the General Counsel, and Dixit Joshi, our Chief Financial Officer. And on your left, Mrs. Joan Belzer, the Secretary of the Board of Directors. On the side, we've got Notary Alexander Gossauer of the Zurich Altstadt Notary's Office. Next to him, Mr. Christian Schmidt, whom we're proposing to be elected as the head teller. Our auditors, PricewaterhouseCoopers AG of Zurich, is represented by Matthew Falconer and Andreen Burnett. I would also like to welcome lawyer Raphael Keller, who is representing the independent proxy Keller AG Lawyer's Office. Dear shareholders, we stand here today in a situation no one could have anticipated. It's a sad day for you and for us too. I can understand the bitterness, the anger, and the shock of all those who are disappointed, overwhelmed, and affected by the developments. We wanted to put all our energy and our efforts into turning the situation around. It pains me that we didn't have the time to do so, and that in that fateful week in March, our plans were thwarted. And for that, I am truly sorry. I apologize that we were no longer able to stem the loss of trust that had accumulated over the years, and for disappointing you, and I would like to apologize for that. 1 year ago, a little more than 1 year ago, I stood before you and agreed to take on the role of chairman of this bank. Not of any bank, but this particular bank, Credit Suisse. I did this knowing full well what the size of the task was, the accumulated problems and the time pressure and the difficult geopolitical and macroeconomic environment. I also knew that in the worst case, we might not succeed in our goals, that mistakes can happen, and that those who are at the helm of the end are responsible too, hence including me. That was the starting point a year ago. It was absolutely clear and unambiguous to us. We needed a comprehensive strategic and cultural transformation. The business model had to be fundamentally overhauled and changed. It was also clear to us that there were unhealthy developments, errant behaviors, and wrong incentive systems, that there were transactions that should not have been allowed to play out, that we needed to work in many areas, not only on structures, but also on mentality and culture. That is what we wanted to rectify. That was the goal of our strategy. But there were positive sides too. Many outstanding, committed employees, satisfied clients, and the strong core on which we wanted to build. This motivated us and inspired us. Despite being faced with these difficulties, I was convinced that the turnaround was achievable because Credit Suisse has many strengths: a strong balance sheet, outstanding employees, and renowned client solutions. Progress was made at many levels. Regulatory issues and close interaction with supervisory bodies became top priorities. Within months, the bank's management team was fundamentally renewed, and a forward-looking strategy was developed to radically adjust the risk and return profile. This gave us confidence. And believe me when I say, we fought hard to ensure a successful turnaround. Ulrich Körner and I were fully aware that such a profound strategic and cultural transformation would require time, and that in year one of implementation, the bank would be most vulnerable. The period from October to March was not long enough. One legacy issue after another had already seen trust eroded, and with it, patience dwindled. And at that we failed. It's a bitter reality to see that our strategy didn't have time to bear fruit. Until the beginning of this fateful week, I believed in a successful turnaround. However, rising interest rates, inflation, and market volatility shook sentiment, and following the issues around US banks, there were fears of global contagion. Social media and digitalization fanned the flames of this fear. This hit us at our most vulnerable in mid-March. The massive outflows of client funds last October were a major setback. Working with the regulators, we withstood this trend thanks to the tremendous efforts of our employees. Yet, the downward spiral of events leading to this fateful week intensified later in that week, swallowing everything. The bank could not be saved. From then on, higher responsibilities came into play with the Swiss government, FINMA, and the Swiss National Bank, focusing on national and international financial stability, as well as the impact on the global economy. Until the end, we fought hard to find a solution, but ultimately, there were only two options: deal or bankruptcy. The merger had to go through. The terms had to be accepted. The only alternative would have been a restructuring under Swiss banking law. This would have led to the worst scenario, namely a total loss for shareholders, unpredictable risks for clients, severe consequences for the economy and the global financial markets. It was our duty to protect the interests of our shareholders as best we could and to provide security to our clients. We did everything we could within what was possible. That's why the board of directors approved the transaction. This was one of the most difficult moments for me. Conclusion of the agreement with UBS was, and completion of the merger is, an essential cornerstone to ensure continuation of Credit Suisse as a going concern. This is a solution that restores clarity, security, and stability. Until the end, we were aware of the macroeconomic sensitivity at play. At the same time, we believed in the bank's resilience, its fitness for the future, its capital strength, and its potential. Yet the momentum of emotions and the erosion of trust proved stronger. We failed to stem the impact of legacy scandals and counter negative headlines with positive facts in order to rebuild the confidence lost. Credit Suisse has been a part of Switzerland for 167 years, for many former and current employees, for clients, for our fellow citizens. This bank forms part of our Swiss identity and the global financial market. The decline of Credit Suisse, the circumstances and various influencing factors can no longer be changed. Credit Suisse will unfortunately no longer exist in its current form in the future. What remains is, understandably, disappointment, bitterness, and among the long-standing employees in particular, also grief about the end of a bank that we continued to believe in. It is now our responsibility to look forward. I will work with UBS leaders Colm Kelleher and Sergio Ermotti for as long as it takes to ensure that the best possible solutions will be found for employees. I'm aware how difficult the situation is for many employees. We are committed to transparently managing this process and keeping this time of uncertainty as short as possible. Our focus is on continuing to serve our clients and on ensuring an orderly and careful transition. We are all committed to this merger and will devote all our energy to create a new and successful future with UBS together. Dear shareholders, we've taken responsibility. We've fought tirelessly to review all the options to find good solutions for the future of Credit Suisse, unfortunately without success. That's why we are now at this point that no one wanted to have. What I would like to do now is offer my thanks to you, dear shareholders, for the trust and support you have shown Credit Suisse over so many years. I would like to sincerely thank our employees in particular. They have shown unwavering commitment to serving our clients day in, day out with tireless dedication and great expertise. They have consistently demonstrated strong client focus, which has been praised time and again. I would also like to thank UBS. I know that they will tackle the upcoming integration and the challenges ahead with great discipline, fairness, and prudence. They're taking over a bank that has outstanding employees, a first-class client base with many long-standing relationships and important and often market-leading assets. Together with Credit Suisse, the new UBS will be able to significantly expand and strengthen its leading position as a global wealth manager anchored in Switzerland. This opens up new prospects for everyone involved. Thank you. And with that, let me hand over to our CEO, Ulrich Körner.
Thank you very much, Axel. Dear shareholders, clients, and employees. I would like to thank you for joining our annual general meeting here at the Hallenstadion in Zurich in such large numbers. This will be our last ordinary general meeting. I'm sure I don't need to tell you that I am deeply saddened by this, and it personally affects me a lot. When I was appointed Chief Executive Officer last year, I was fully aware of the enormous challenge that lay ahead for the bank, which has a proud history spanning 167 years. As you probably know, I had worked at Credit Suisse before and had a lot of fond memories of that time. When I returned to the bank in 2021, it was because I firmly believed that I could make a positive contribution, reduce legacy issues, tackle the problems that existed, and build a new Credit Suisse. In short, I wanted to create an organization that our shareholders, our clients, and all our employees could be proud of. Unfortunately, we didn't succeed in the end. We ran out of time. This fills me with sorrow. What has happened over the past few weeks will continue to affect me personally and many others for a long time to come. Many of you are long-standing shareholders of Credit Suisse. And I am aware that many of you are former or long-term Credit Suisse employees who spent a long time working for the bank. I would like to take this opportunity to express my profound gratitude for the loyalty you have shown Credit Suisse over the years. I understand that you feel disappointed, shocked, or angry, and I share the disappointment with you, our shareholders, but I also share the disappointment of all our employees, our clients, and ultimately the public at large. In February, we announced our financial results for 2022. Net revenues fell 34% year-on-year, reflecting declines across all our divisions. We reported a pre-tax loss of 3.3 billion Swiss francs and a net loss of 7.3 billion Swiss francs for the year, including significant write-downs of deferred tax assets. These results are totally unacceptable, but they clearly showed why it was necessary to launch a new strategy, which we announced at the end of October 2022. We had a plan to create a new Credit Suisse, a simpler, more focused bank built around clients' needs and based on the leading wealth management and Swiss bank divisions. The unprecedented radical restructuring of the investment bank with a clear plan was another key element of this strategy. Furthermore, we had a brand new executive board, which was working relentlessly on implementing this new strategy. We were executing at pace and were making good progress. We had already started to significantly de-risk the bank with the restructuring of the investment bank, and we were on track to achieve all of our 2023 targets. As Axel Lehmann mentioned, we were focusing all our efforts on changing course and addressing the problems of the past, to put Credit Suisse on a solid footing and to position it as a strong global Swiss bank. We worked hard to achieve this right until the very last minute. Unfortunately, it was not enough in the end. The bank had been significantly weakened by the strong outflows of assets in October 2022 as a result of unfounded rumors and speculation. At the same time, for legal reasons, our hands were tied for almost 4 weeks until the new strategy was communicated on the 27th of October 2022. Only then were we able to address these incorrect statements. I am extremely impressed by the way our employees rallied and made a huge effort to win back the trust of our clients. My colleagues on the executive board and myself, we also spend a lot of time in reaching out directly to clients to convince them to stay with the bank or to come back to us. The situation then stabilized somewhat at the beginning of 2023, in spite of a difficult geopolitical and macroeconomic environment. But despite all our efforts, we could no longer reverse the loss of trust. The sudden collapse of Silicon Valley Bank and Signature Bank in the United States caused shockwaves around the world and triggered a dramatic loss of confidence in the global financial industry. We were particularly hit by that and were particularly vulnerable at the time. While we were able to turn the situation around at the end of 2022, we were unable to repeat this achievement. This is a matter of deep personal regret to me. But the bank's survival was at stake, and we were forced to act quickly and resolutely. We no longer had a choice. The collapse of Credit Suisse would have been disastrous, not just for Switzerland, but for the global economy at large. Together with the Swiss government, the Federal Council, the Swiss National Bank, and FINMA, the supervisory authority, we worked hard to find possible solutions within a limited time frame. In the end, the merger with UBS was the only feasible option. Indeed, the announcement immediately brought back stability, created trust, and paved the way for an orderly transition in the interests of our shareholders, our clients, our employees, and our business partners. Ladies and gentlemen, I share your disappointment. After 167 years, Credit Suisse is giving up its independence. A proud and at times turbulent company history is drawing to an end, and something new is being created. The integration of Credit Suisse into UBS brings together two market-leading wealth management franchises and two strong Swiss banks to create an even stronger global financial services company. As shareholders, all of you will be directly involved in the combined company's future, and I'm convinced that the entrepreneurial spirit shown by our employees, a significant part of Credit Suisse, will continue to live and make a positive contribution, albeit in a new form. During my short time as Chief Executive Officer of this bank, I never ceased to be impressed and inspired by the dedication, commitment, and passion shown by my colleagues. I would like to express my heartfelt thanks to all of our employees, every single one of them. They truly deserve our respect. As CEO, together with my colleagues on the executive board, and with the support of all our Credit Suisse employees, I will do everything in my power to ensure that the merger is completed to fully realize the great potential of the merged banks. We owe this to you, our shareholders, and we owe this to you as well as our clients, our employees, and to the Swiss public.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The circus is in town in New York.
New York City is always ready. Our message is clear and simple. Control yourselves. New York City is our home, not a playground for your misplaced anger.
It's a global spectacle. This is not just something that concerns the U.S.
The circus is going to persist not for weeks or months, but maybe for the next couple of years.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement and plead not guilty to charges in a hush money case. The last days of Credit Suisse. Shareholders whose stock has plummeted are likely to be unhappy at the Swiss bank's final annual meeting now. And Federal Reserve Governor Lisa Cook says disinflation in the U.S. is underway, but a tight labor market and China's reopening could keep pressure on prices. Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Matt Miller is in New York. Anna Edwards is off today. Matt, sure, equities are a little bit higher, but underneath the surface, according to Bank of America, we really hate stocks right now.
Yeah, absolutely. I mean, there is a lot of bearish sentiment out there. We continue to get notes from people like Marko Kolanovic saying these rallies are kind of fake news and watch out for the real thing when we test the October lows in the next couple of months. Now, that could be a contrarian indicator, and maybe the markets are reading it that way. The S&P 500 futures are rising right now, and we did finish higher in the cash trade yesterday, so we're solidly over 4,100 on the benchmark index. We do see yields rising a little bit, and to be frank, yields have been all over the place. You know, yesterday we were looking at the 10-year at 354, 355, and then it dropped down to 341. These huge moves are pretty unbelievable, let alone the 40, 50, 60, 70-point moves that we see in the 2 years. So I'm not sure how much we can take from these yields right now. NYMEX crude is the first thing I checked when I woke up this morning, and I'm sure I'm not alone. hasn't moved much from yesterday. So we got that big jump after OPEC came out with a surprise cut on Sunday, but it seems like the markets are comfortable with NYMEX, with WTI at $80 and Brent that little bit higher. For now, it looks like we're gonna stay that way. And then Bitcoin, speaking of stay that way, still at 28,000 and change right now, 28,117, so showing continued stability for the OG crypto. Just a quick look at what happened in Asia overnight. We did have the broader benchmark index, the MSCI Asia Pacific, down about 0.25%, but you have the Australian 10-year yield coming down right now at 326, and as Danny was telling me this morning, this is very important to watch the Reserve Bank of Australia because they were the first ones that led us into the hiking cycle, and now they're paused. So maybe they could be the first ones to come out as well. The Nikkei up 1/3% overnight in Japan, and the US dollar a little bit stronger against the Japanese yen at 132.91. But the Bloomberg Dollar Index is coming down a little bit, so that could be a bit of a tailwind for risk assets. Danny, what do you see in Europe?
Matt, I'm ready to leave right now. I got you hyped up about the RBA. As far as I'm considered, my job here is done. Look, you said stability when it comes to the U.S. market. And that is what we're seeing in Europe. We're up across the board, not really decisively, so I don't know how much conviction are behind these trades, but DAX at more than 0.5%, CAC 1/3%, pretty flat on the UK benchmark, but that might be some FX effects I'll show you just in a moment. So it means overall for the Euro Stock 600, we're just floating higher with no catalyst to really move us one way or the other. The dollar weakness, though, that is playing through very apparently in sterling. I showed you FTSE 100 stocks that were unchanged this morning. Cable trades at 124.74, up 0.5% this morning. Again, it lends itself back to the dollar weakness. Lisa Cook talking about disinflation process starting, and at the same time, you have an ECB, Holtzman, one of the policy members, saying that they're still on track for a 0.5-point hike. He said that yesterday, and you continue to see yields drift higher in Germany. The 10-year yield up nearly 5 basis points. Finally, L'Oreal, not a big move here, but a big deal for them. They're spending $2.5 billion to buy Aesop. That's the skincare company. Their stores are just so aesthetically pleasing. So that's my takeaway from this deal. But more than that, Matt, you do have L'Oreal spending up buying later stage luxury companies. Before, it used to be all about early buys for them, but now they're spending a pretty penny to again, get some pretty stores under their belt.
All right, so we'll continue to follow the retail and consumer picture, but I want to get back to the politics right here in New York City. Former President Donald Trump is set to be arraigned today following his indictment, his historic indictment last week. Trump will surrender to law enforcement officers in Lower Manhattan to be booked. He's going to be fingerprinted. We'll get a mug shot in case you didn't know what he looked like. Here are the charges against him. That's probably the big deal, and then we'll get his plea, likely not guilty. Bloomberg's Kriti Gupta joins us now from outside the Manhattan DA's office. So, Kriti, how are we expecting things to play out today?
Well, Matt, it's going to be a historic moment for the entire country, but all the action is going to happen in the building right behind me. This is outside of the district attorney's office, where you are going to see President Trump escorted through a back entrance for really all the things you just said. Remember, the indictment that we got last week just establishes that a grand jury thinks there is enough evidence here to go to trial. This next step really is all about the charges, but the real takeaway is that, look, we're looking for anywhere from 24 to 30 charges, and we don't actually know what they're going to be. Overnight, the judge said that, look, there will be no live broadcasting of the arraignment, potentially neither of the trial as well. Right now, only photographs are allowed before the hearing even starts. So we're not even going to potentially even get an answer of what the lead charges actually are until perhaps days or weeks after today's arraignment. The big takeaway, though, is what the response will be here in New York City. You're already seeing a massive police presence, a massive press presence, really protecting and preventing any sort of widespread rally or protest in either direction, to the point that you are starting to see strays from 57th Street down several blocks around Trump Tower, which is around Central Park for our global audience, all barricaded and off from the public.
There's already so much that's unprecedented about this, Kriti. The fact that he's a former president, and soon another unprecedented thing, he'll be a candidate facing charges. What does that mean for the 2024 campaign?
Well, one of the big questions here, Danny, is if he's charged with a criminal conviction, does that disqualify him from being president or even running for president? The simple answer is no, but there are some nuances here because, look, he is still dealing with several charges. The main one that's getting a lot of attention, that seemed to be the game changer for Alvin Bragg, the prosecutor here, was the hush money payments, about $130,000 to adult film star Stormy Daniels. But look, he's dealing with other legal trouble as well. Some of that includes classified documents, moving them from the White House to Mar-a-Lago. Other things include his role in the January 6th Capitol insurrection and what role he also played in potentially overturning or trying to overturn the Georgia election count in the 2020 election. So there's a lot going on here. The criminal conviction alone won't disqualify him, but in the Constitution, it says if there is any signs of treason, of insurrection, or of moving classified documents, that will for sure disqualify him from holding any public office.
All right, Kriti, thanks very much. Bloomberg's Kriti Gupta down there outside the DA's office. We hope you stay safe today. I imagine there will be many protesters and supporters gathered to welcome the former president. Now, let's get to banking. Credit Suisse's last annual general meeting is underway in Zurich. It's an opportunity for shareholders to speak directly to the board for the first time in 4 years. Credit Suisse Chairman Axel Lehmann spoke about the bank's problems.
The business model had to be fundamentally overhauled and changed. It was also clear to us that there were unhealthy developments, errant behaviors, and wrong incentive systems, that there were transactions that should not have been allowed to play out, that we needed to work in many areas, not only on structures, but also on mentality and culture.
For more on this, we're joined by Bloomberg's Oliver Crook. He is in Zurich. So, Oliver, what else have we heard from management at this meeting?
That's right, Matt. That is the chairman speaking right there. There are almost 2,000 shareholders in there. And as you say, this is the first time that they're able to see the board and discuss with the board all of the issues that they've had, yes, over the last 3 weeks, but over the last 4 years. And if you held shares since the last AGM, you got wiped out to the tune of 93%. So we've had the chairman out saying, really, the main message is sorry that our turnaround was not able to be successful. He really was saying that we did not have time to execute. And basically he was saying that I think one of the big questions for shareholders, was there another option on the table? He's saying really not, that the bank could not be saved. It was a deal or bankruptcy, which would have been cataclysmic, not just for Switzerland, but for the global financial system. The CEO also speaking, saying, again, we've ran out of time, and that he's filled with sorrow, and that it affects him personally on many levels, and that the collapse would have been a total disaster. But imagine, you know, these shareholders here, they've just lined up. We've just started. Now they're going through the votes, and now what comes next is the shareholders making their statements and asking their questions to the board.
What are we expecting from that? What could the shareholders, or what's top of their list and agenda of what to get out of Credit Suisse?
So you speak to people here, you know, some people are here just to spectate, to see the end of this, you know, what has been a 170-year saga for Credit Suisse almost, and really that came down in a matter of weeks. Some of them are just there to see that and to hear what has to happen. But then, you know, I spoke to the Ethos Foundation CEO. He represents the proxy vote for the shareholders for Swiss pensions. That's about 3 to 5% of Credit Suisse and UBS. Here's what he said to me a little earlier.
Looking for past compensation and variable compensation paid to former board members. If there were to be some additional clawback to activate, because currently it's only the bonus 2020 and 2021 which are concerned, but there is more kind of deferred bonus which should be clawbacked, I guess, from former management.
So two sort of concrete things out of this, because obviously a lot of this is going to be symbolic. The concrete things, they're going to be voting on a number of board members, including the chairman. The Norges Bank has come out against the chairman. And this is really who is going to be the steward of this bank in the time that it goes to UBS, and basically being able to review all of the sort of issues and wrongdoings in the past. And for Ethos, for at least, that an investigation into the sort of mismanagement of the past could see some clawbacks and could actually hold some shareholder value in terms of getting paid out. So these are some of the questions that are going to be presented. I'm sure there will be a lot more. This will go all the way until maybe 6 p.m. tonight. So there's going to be it's a long day ahead.
All right, well, in that spirit, Oliver, go get yourself some coffee before the Q&A speaks. Oliver Crook there outside the AGM in Zurich. Australia's central bank, which is Matt Miller's favorite central bank, paused its almost year-long tightening cycle. Australian bond yields and the Aussie dipped after the RBA held its cash rate steady at 3.6% as it assesses the lagging impact of previous rate hikes. Eddie van der Walt, Bloomberg Markets Live editor, joins us now. Eddie, all joking aside, the RBA has this almost symbolic significance, maybe even not. I mean, they started this tightening cycle.
Yeah,
is this them ending it?
Look, I think they're everybody's favorite central bank, right? Because not only do they come, have they been early in the cycle, they come early in the day. So you've got lots of time to think about it and talk about it, right? But look, as you say, joking aside, I do think that what they are is symbolic. I don't think that it is necessarily going to mean that the rest of central banks are going to pause. But what they tell us is that, look, at the beginning of the year, central banks told us they were going to prioritize price stability over growth. What we are now learning is that central banks are prioritizing financial stability over inflation, right? And I think that is what the Central Bank of Australia is, Reserve Bank of Australia is symbolic of. I also think that what they're showing us is that they're going to stand back a little bit and wait and see. Before we really see further tightening coming back to them.
I think, Danny convinced me of the importance in terms of the cycle, but also obviously this is on the doorstep of the commodity boom and bust cycle.
Oh, yeah.
So they really are in some ways a litmus test for what the rest of the central banks around the world need to do in terms of inflation. In that vein, Fed Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market, also the war in Ukraine, and, of course, the reopening in China that we're all watching. Listen to what she said yesterday.
We are still going to see an inflation from that, but we've seen wage gains moderating quite a bit. So that, I think, is a hopeful sign. But the disinflationary process is I think it's in process, it's in train. We're not there yet.
So everything but the commodities angle, obviously the OPEC plus surprise cuts may have an effect on inflation as well. Eddie, what's your view on the Fed's outlook?
Yeah, look, I think the Fed and other central banks would dearly love to hike rates further. They would like to show that they are taking the fight to inflation, bringing price stability back to the market, which is one of their primary goals. But at the same time, they do not want to tank the economy. So I think what we're going to see here is, look, they all had a shock. We saw a banking instability. As long as we don't see further banking instability, if we do not see another bank topple in the next month or so, then I think the hawks come back and they come back hard at us, and the market will reprice accordingly. But for the moment, I think there is just enough uncertainty for them to probably create a little bit of a window and say we take the foot off the brake pedal.
Hey, and you never know, maybe jobs on Friday will give them a little bit of breathing room too.
Absolutely. The jobs numbers on Friday, I think that's a wild card.
Eddie, thank you very much. As always, that's Eddie van der Walt of Bloomberg M Live. Coming up on the program, we're going to be speaking EM, emerging market strategist at NatWest, Emer Daly, will speak to us. How does the Fed's tightening cycle impact the market she's looking at? And more on Trump's day in court with Thomas Gift, director at UCL Center on U.S. Politics. Plus, it is a busy morning in Brussels. A NATO foreign ministers meeting and the EU-U.S. Energy Council meeting are underway. Our very own Maria Tadeo is there and will bring us the latest from both of those meetings later this hour. This is Bloomberg.
Joining NATO or not, then Finland joining NATO or not, to join the alliance. Finland decided to join NATO becomes stronger and NATO.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store. so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller in New York alongside Danny Berger in London. Anna Edwards is off this week. We are looking at bond market volatility, which has really been, well, almost off the charts, but certainly compared to equity market volatility as measured by the VIX, it's been exponentially higher. The MOVE index just shows us that there's nowhere to look for stability in this bond market. Joining us now is Ksenia Galushko, Bloomberg Equities team leader, to tell us what this means. I mean, why is the VIX showing such relative calm under 20 when the MOVE index is showing that bond yields are just all over the place?
Yeah, Matt, it's been a really interesting discrepancy. I mean, in general, in March, stocks have held up quite well, considering that we had those two massive financial distress factors, the Silicon Valley Bank's collapse and then the Credit Suisse's takeover by UBS. So despite that, equities have held up quite well, and VIX is really showcasing that. Yes, VIX did spike above 30 briefly, but then it very quickly returned to the level below 20, which to most market strategists indicates that the calm is there in equity markets, and investors are really betting that the Fed and the ECB might soften their stance going forward.
And it's a resilient equity market, especially as Matt and I started out the show talking. Sell-side sentiment is just so poor right now.
Absolutely, yes. And we've seen major outflows from equity funds as tracked by EPFR global data. I mean, people have mostly been rotating into cash. So money market funds have seen the biggest inflows in the first quarter since the start of the pandemic, when there was huge risk-off sentiment. So yes, investors have been coming out of equity funds, but at the same time, it's interesting because equities have actually stabilized and have been gaining. So there's this discrepancy between equity flows and also what the market is actually doing. But according to Bank of America's bull bear indicator, this is actually bullish for stocks, because when the sentiment is so negative, it is a contrarian indicator that stocks have room to rise from here.
Right, historically, that's the perfect time to be buying. Ksenia, thank you so much for joining. That's Bloomberg's Ksenia Galushko. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
No one can claim that climate change is somebody else's problem or shrug it off for future generations to address. We're all affected by a warming planet. We see that every day. And decisions being made right now will determine our shared tomorrow. So we must choose, and we must act as united nations ourselves. Our progress depends on collective action, on collective ingenuity. If we stick together, we can make fixing the climate the greatest project and greatest achievement of our lifetimes. We have the science, we have the solutions. Now all the world needs is political will. Together, we can create a future where rampant carbon is removed from the atmosphere, where green buildings and green business transform the livability of communities.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The moment news breaks, no one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of three very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now keeping you up to date with the first word news. Let's get to it. Russia has taken over the rotating presidency of the United Nations Security Council. Its ambassador made it clear that it will use the opportunity to promote its defense of the war it has waged in Ukraine. The U.S. ambassador to the UN, Linda Thomas-Greenfield, called the matter an April Fool's joke and said Russia will use the chance to spread more disinformation. In California, relentless winter storms have left behind one of the state's biggest snowpacks on record. Officials say its water content measures 237% of normal. That's good news for California, which has been suffering through a drought. But there's also concern that warmer weather could lead to flooding and mudslides in the state's Central Valley. In sports, the University of Connecticut has won its 5th NCAA men's basketball title. The Huskies beat San Diego State 76-59 in Monday night's final in Houston. UConn's Adama Sanogo finished with 17 points and 10 rebounds and was named the tournament's most outstanding player. And Bloomberg has learned that Warner Brothers Discovery is close to a deal for a streaming TV series based on the best-selling Harry Potter books and movies. Each season of the series would be based on one of J.K. Rowling's bestsellers. Warner Brothers previously turned each of the books into a hit movie, of course. And we have a producer, Danny, Caitlin Hubbleman. I'm not sure if you know her. She plays on a professional Quidditch league. So this has become serious business.
That is incredible because you know why? It's us that grew up as Harry Potter nerds. We're now adults and organizing things like that. I will certainly be watching that program. All right, coming up on the show, Emir Daly, emerging market strategist at NatWest, will speak to Matt and me. This is Bloomberg.
today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement and plead not guilty to charges in a hush money case. It's the last days of Credit Suisse, as shareholders whose stock has plummeted are likely to be unhappy at the Swiss bank's final annual meeting today. And Federal Reserve Governor Lisa Cook says disinflation is underway in the U.S., but a tight labor market and China's reopening could keep pressure on prices. I'm Danny Berger in London with Matt Miller in New York. Anna Edwards is off today. Matt, yes, stocks are higher. I got to say, it doesn't feel a lot of conviction, but maybe we're taking hope from an RBA which has decided to pause. Maybe it means the Fed is next.
Yeah, absolutely. Maybe that's the beginning of a pause cycle or even a pivot cycle around the world as the RBA led the hiking cycle, or led us into the global hiking cycle. On the other hand, stocks are already relatively high and relatively richly valued, right? We're trading at more than 18 times earnings, and the S&P 500 is well over 4,100 in the cash trade we saw it close, I think, around 41.37 yesterday. Right now, we see S&P futures up a little bit nonetheless, and investors willing to let go of the perceived safety of government debt. The 10-year yield floating up a little bit. Remember yesterday at this time, it was at 353, 354, and then it plummeted to about 341. Now we're climbing to 345. As we pointed out, the volatility in rates has been off the hook. So you're going to see any given number depending on what time you look. NYMEX crude, after the jump from the OPEC Plus surprise production cut, it went to 80 on WTI, and it's held there. Obviously, Brent crude is a little bit higher, but right now we're trading at $80.93 a barrel, and Bitcoin has been a picture of stability as usual. $28,105 is the level for the OG cryptocurrency. Let's get into some of the pre-market movers this morning. In terms of single stock stories, Etsy is one of those that's moving in the pre-market up 3.5%. Piper Sandler upgrading Etsy to an overweight, saying that while macro remains choppy, the online marketplace operators' operating profit margin and long-term growth opportunities put it among the highest quality names in coverage. That's a pretty serious statement. They say core marketplace strengths of sustainability, intention, and personalization fit well with core values of Gen Z and millennials. And I did some channel checks this morning, and that tracks. Stellantis is a mover up almost 1%. This global automaker has reshaped its European financing and leasing services to simplify relations with bank partners and to tap growth potential. We've seen other automakers do the same. Ford yesterday put out a press release saying it's making moves with its credit arm to go direct to consumer. In general, automakers are seeing stronger U.S. new car sales because dealer inventories are replenished. David Welch and Keith Naughton, two of our brilliant reporters out of Motown, have a great story on this that I recommend checking out on the terminal. They point out that those gains are being muted by incredibly high sticker prices, as someone who shops for cars all the time can tell you, and surging financing costs that may put monthly payments out of reach for the average Joe. Finally, Warner Brothers Discovery is close to a deal for a new streaming TV series based on Harry Potter. We had told you about this. They are obviously best-selling books, a string of Hollywood movies, and now you'll be able to stream. Each season of the series, according to these people, will be based on one of J.K. Rowling's 7 books. So that means a long time to milk it and make money in terms of WBD, Warner Brothers Discovery's HBO. I want to point out that Virgin Orbit Holdings, we knew something was amiss here as they were cutting 85% of their staff, but now they're filing bankruptcy, Chapter 11 in Delaware. As a result, what was already a penny stock falling another 26% in the pre-market, and you expect it to plummet in the cash trade as well. Danny?
Virgin Orbit going bankrupt is kind of the full circle of the SPAC boom. And yes, that is an orbiting joke. Okay, so European stocks, those are up 0.5% this morning. Look, it was a really mixed day yesterday. It was really because of the oil story that drove things, but we don't have that big catalyst today to really put us in one direction or the other. So we are more or less just kind of melting higher, waiting for something to happen. Sterling, though, that is decisively higher. We're at 125.01. On it, up 0.7% versus the dollar. It is a day of a broadly weaker dollar, and that's translating into FTSE stocks being down this morning, that currency effect. There's also an ECB where you continue to have hawkish members who are saying hawkish things. Yesterday it was Robert Holtzman who said a 50 basis point hike is still on the cards for the ECB. So you continue to get a sell-off in German bonds. 10-year yields are higher by about 4 basis points. Finally, just want to point out a big M&A coming to Europe. It has been a really slow year given just how difficult it is to get financing from banks from leveraged deals. Certainly the Credit Suisse stuff doesn't help. But L'Oreal will be buying Aesop, the skin brand. They make soaps, they make shampoo, that sort of thing. From a Brazilian company, Natura. They're going to be buying it for $2.5 billion. So it's a large deal, and Matt, what this really does is just add to L'Oreal's luxury portfolio.
Yeah. Well, I know I have it in my luxury kit. We'll continue to watch those shares for sure. L'Oreal up there about 0.5% in the cash trade in Europe. Let's get now to emerging markets. A turbulent end of the easy money era has deflated expectations for a boom year for battered EM assets. Joining us now is Emer Daly, emerging market strategist at NatWest. And I want to first ask you, Emer, if you take at least a little bit of comfort from the RBA's pause. As Danny pointed out, they led us into the hiking cycle. Can they lead us out?
Yeah, I definitely think it is a positive. You know, we've obviously seen kind of concerns about financial stability really rock EM assets and kind of undermine some of the confidence an investor had at the start of the year for like a risk rally. But I think the fact that we are seeing G10 central banks pivot dovishly, you know, this inflicted so much pain on emerging markets all through 2022 just via currency depreciation and kind of sucking capital, global capital out of their local bond markets and equity markets, that actually that pivot, you know, a dovish pivot from G10 is so crucial to their outlook. And I would argue it's actually positive for EMFX.
It comes after a kind of a depressing sign from OPEC Plus, right? The surprise cut that they made on Sunday sends a signal that the demand just is not showing up from a reopening of China. We expected that to drive global growth. What's your take on what we've seen?
Yeah, I would, absolutely say that's true. And I would caveat my kind of positive EM outlook by saying it's high quality carry that we expect to perform. This isn't kind of the supermarket sweep that we had at the start of the year. This isn't a case of investors kind of loading up on all EM assets. This is very much kind of nuanced. Definitely OPEC Plus acted yesterday in kind of a defensive price mode. They did, cut back oil production because we have had, a negative hit to growth from banking sector concerns. So I think it's very much in line what we've seen over the last few weeks. They're acting preemptively, and we know that global growth, is slower. People have downgraded their expectations, but I still think there is selective opportunities there for high carry, high quality EM assets.
I was going to say, because usually the risk of a recession in developed economies, usually China maybe not growing as much, is bad for EM. So on a whole, is that still true, except for the high quality names?
So yes, we are not overly constructive, I would say, about Asia FX. We are more looking towards high carry, where you get paid for taking those risks. So we like Mexican peso, we like Brazilian real, we like HUF on a very short-term basis, and we like Czech Republic, where, remember, these central banks are still being very conservative. They haven't pivoted dovish, even though in a lot of cases, inflation is actually coming lower. They are really concerned about the risk of capital outflow, and they had a stark reminder of that over the last few weeks. So you've seen them really push back, delay when they could actually start easing, and that means that investors could earn significant returns by just holding their currency.
I was going to say, I did write down a list of EM decisions last week, which were hawkish. South Africa, Philippines, Egypt, Colombia, Mexico. The thing that stands out to me is these are geographically very far apart countries. They're diverse. They have different drivers, but yet they aren't pausing. And as you say, they probably could. So how does that change the economies of these countries going forward? Do they risk tightening things too much?
I think the reality is, they're geographically spread, but they're all emerging markets, and investors look at them in the same way. And if you had continued to get Fed tightening or G10 central bank tightening, you would have had global capital just being pulled out of those and depreciation pressure. So yes, it is tough on those economies that, they have to keep rates very high in order to kind of appease financial markets, to kind of offer investors return for the risks embedded. And I would say, there's a lot of cases, for example, Mexico, where, you do have spare capacity opening up in the economy. Arguably, they could cut, but they're very much kind of focused on appeasing foreign investors and bringing inflation right back down to target.
Do you see the dollar weakness that we're watching continuing, Emer? Because last year we were up at 1353 on the Bloomberg Dollar Index. Today we're down at like 1226. So even as bearish sentiment rises, no one's running to it for safe haven.
Yeah, I do think the big risk is that other side of the dollar smile, that, you do get another kind of capitulation in risk, and everyone runs for the dollar. But right now, I think, the big driver over the last 2 years has been monetary policy divergence, and the U.S. led that G10 rate hiking cycle, and obviously the dollar led gains. We have seen risk recover. I know some of it, I know you mentioned the bond space, that vol has been slow to come down, but in equities, we are seeing risk recover. In the VIX, we're seeing it recover. So we are seeing, signs of more stability coming back into markets, and it does look like, time and again, kind of fiscal regulators has stood behind the banking sector, have stood behind financial markets.
Stability would be so nice, considering the lack of sleep we all have not had over the past month.
Yeah.
Emer, thanks so much for joining us this morning. That's Emer Daly of NatWest Markets. Now, coming up, Donald Trump is set to appear in court today. We're going to have the latest with Thomas Giff, director at UCL Center on U.S. Politics. This is Bloomberg.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Danny Berger in London. Now, the New York City Police Department, U.S. Secret Service, and other authorities are on high alert as former President Donald Trump is set to be arraigned this afternoon in Lower Manhattan. Remember, he forecast death and destruction if he were indicted. That has happened. And Trump's lawyers say he will plead not guilty of hush money payments made to a porn star during the 2016 campaign. Joining us now to talk about this is Thomas Gift, director at UCL Center on U.S. Politics out of Harrisburg, Pennsylvania. And Thomas, let me first ask about, the allegations that we know about, right? We're still waiting for the charges, but is there any doubt really that the president made these hush money payments through his lawyer?
There's absolutely no doubt about that. And in fact, Donald Trump has acknowledged as much. So really, this is just about whether that act actually constituted a crime. Matt, there has just been so much speculation about the charges so far on both the left and the right. And really, that's all it is, speculation. We have an idea of what the counts will include, but we don't know precisely what they'll be. And more importantly, we don't know what the exact evidence Attorney General Alvin Bragg may or may not have in his back pocket. Obviously, this is a political moment, and partisans are going to do what they do. For Trump, it's a witch hunt, a partisan vendetta, a George Soros-funded hit job. For never-Trumpers, this is all sort of poetic justice. But I do think that it's a little bit unfortunate to this point that there hasn't been more restraint in approaching the case, precisely because we don't know what these charges are or the underlying evidence.
Yeah, even from the point of view of Democrats on the left, there is concern about why Alvin Bragg has brought this case. There have been accusations that he's doing it to get ready for his re-election campaign. I mean, what kind of charges do we need to see that would actually make sense for, giving the former president this much publicity?
No, absolutely. It's a great question, Matt, and certainly Republicans are asking it, but a lot of Democrats are as well. And that's especially the case because there are all these other cases that Donald Trump is currently embroiled in. For example, the election rigging case in Georgia, the case over the mishandling of classified documents, the investigation into January 6th and its aftermath. I think a lot of Democrats think that the evidence is stronger in those cases than in the current one. Again, with the caveat that we don't know exactly all of the charges that Alvin Bragg is bringing. But you would think that there would need to be a fairly high threshold here to make it all worth it and for it not just to backfire on Democrats. And that's really been the entire risk to this point. Donald Trump has, I think, quite successfully in the court of public opinion, been able to use his standard lines of witch hunt, political vendetta, political hit job, et cetera, to frame this essentially as saying, if it were anyone but Donald Trump at the center of this controversy, no prosecution would ever be filed.
In terms of that high bar, because one of the things we're waiting to see is what changes this from a misdemeanor to a felony. How high is that bar? What sort of things does a prosecution need to prove in order to charge Trump to that level?
Yeah, no, it's a really great question. And I think at this point, Trump's defense is essentially that, yes, I made these hush money payments, but there's nothing illegal about having an individual sign a non-disclosure agreement in exchange for silence. And essentially the defense is going to say, well, these hush money payments really had nothing to do with the campaign and everything to do with just avoiding personal embarrassment. Trump seems to have no shame, so that strains credulity on its face. But I think it's going to be hard to disprove that if you are the prosecutor. But there's been a lot of back and forth till this point about whether this should be charged as a misdemeanor or whether it should be charged as a felony. I'm not a lawyer. I can't speak to all of the particulars. But, there has been some indication that this would rise to the level of a felony if the payments were in furtherance of this larger crime surrounding campaign finance, and that it's not just a simple case of cooking the books or misrepresenting business documents.
Thomas, quickly here, what do you make of the fact that most Republicans, even those who are assumed to run against Trump for the presidency like DeSantis, have more or less backed him, have rallied around him, have called out Alan Bragg?
Well, the phrases hush money, adult film star, criminal indictment, combined, it doesn't seem like they translate into a successful run at the White House for Donald Trump, especially for a twice impeached candidate who lost the 2020 election. But this is Trump. I mean, what else can you say? He's dictating the terms of the conversation. And Trump's opponents, as you suggest, really aren't punching back. And I think that's because they don't want to alienate the MAGA base. We saw Ron DeSantis explicitly say that he wouldn't participate in any extradition pursuit of Donald Trump. I mean, no one really asked him anyway. But it's really, really interesting because we really have seen this reluctance among other Republicans not to go head on against Donald Trump. And I think that's probably an indication of what we're going to see leading into the heart of the 2024 election, that, a trend that has been emergent over the last several years is that Republicans just don't want to criticize Donald Trump directly because they don't want to alienate the base. And I think essentially that's reflective here.
Okay, Thomas, thanks so much for joining us this morning. Certainly gearing up for a historic day. Thomas Gift of UCL Center on U.S. Politics. Coming up, big meetings underway in Brussels on energy security and Ukraine. We're live next with the latest from the NATO and EU-U.S. Energy Council. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
what do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now let's take a look at what's ahead today. Credit Suisse is holding its last annual general meeting in Zurich. That's ongoing at the moment. Our Oliver Crook is live in Switzerland to report on that. Plus, more Fed speak coming out with Susan Collins, Lisa Cook again, and Loretta Mester set to speak. We'll bring you all the headlines from those speeches, as well as any Q&As that may follow. Trump's arraignment is expected at 2:15 New York time, so we'll finally get the charges against the former president, this historic indictment. And in Brussels, NATO foreign ministers are beginning a two-day meeting. The EU-U.S. Energy Council has also been meeting with U.S. Secretary of State Anthony Blinken in attendance.
And Bloomberg's Maria Tadeo is also there covering both those meetings and joins us now in Brussels with the latest. So U.S. Secretary of State Anthony Blinken and the EU's foreign policy chief are meeting today, as Matt was just saying. Maria, what have we learned?
Well, Danny, two things. One, they reiterated and repeated their support for Ukraine, but obviously this is coming in the week where you see OPEC make big moves, and this has serious ramifications for the oil cap for the European Union and the G7, because remember, if oil prices go up, you get to a point where that $60 a barrel cap could be compromised. The other issue, of course, and maybe you've noticed because the background gives it away, we've now relocated to NATO, where in a few hours, Finland is now expected to join officially the alliance. This is a historic shift from a country that was neutral. And let's make it very clear, Finland would not be joining today NATO had Russia not invaded Ukraine. So this is one of those real ramifications, geopolitical repercussions of the war that is, unfortunately, as you know, still ongoing.
Okay, Maria, thank you very much. Bloomberg's Maria Tadeo in Brussels. And yeah, Matt, look, it's interesting. Maria's got a lot to cover there. We have Finland also just on the heels of an election joining NATO. We really have seen that change after Russia's invasion of Ukraine. It really has changed the European landscape when it comes to alliances.
100%. Plus, you've got these surprise oil cuts, production cuts that came out on Sunday, and that could change the calculus as well.
Yeah, it's, again, OPEC Plus wanting to be the central bank that moves things. It's not just the Fed, it's OPEC and Saudi, too. Well, more early. That's it for Early Edition. Surveillance is up ahead.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep rate World Cup.
This is a 3 as the economic picture does.
The OK is getting ready to make
This is Bloomberg.
The OPEC decision is more like a catalyst on top of something that's already moving the other direction.
If I were in the Federal Reserve's position here, I would not look at higher oil prices as a reason to get tighter.
These crises just push us off kilter and make it very difficult to get back to where we need to.
The markets are saying real interest rates are going to be positive at a significant level for the next decade.
I think the market is telling you that investors are starting to exhale a bit, even if they're not breathing easy just yet.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television from our studios in Washington and New York. We say good morning on a Tuesday. Lisa, there are at least 14 major stories this morning. We're over with Maria Tadeo in Brussels and Finland. We have an indictment and arraignment in New York. We have the markets. We have the economic data. Let's summarize it up. The two-year yield, that indicator of all, falls below 4%.
That, to me, is the theme, because what we're looking at right now is a massive credibility gap, with the Fed saying that this economy is too hot for comfort and markets saying, no, it's not. We're careening toward recession, and we're pricing in much lower rates ahead, Tom.
And the news yesterday, for those catching up after a long weekend, it's simple. The Atlanta GDP Now indicator clearly shows what Lisa's talking about, which is a slowdown in first quarter GDP from a statistic of 3.5%, 10 days ago, Lisa? 2.7%, and now beneath 2%.
This is really the tension, and yesterday's ISM manufacturing data came in at some of the lowest rates since we've seen since the peak of the pandemic. So how do we piece this together? Is this a rolling recession within specific sectors? Does it not reflect the reality because the data is noisy? To me, really, yields speak volumes. And right now, it's not just the 2-year. The 6-month T-bill yield, Tom, you've been talking about triple leveraged all cash and how much a 5% psychological bogey is really getting people to move their money into money market funds. Well, that is now down to about 4.5%. So we have lost about 0.5 percentage point of extra yield in just a snap of the fingers as people reassess just how hot this market truly is.
And we reassess into economic data. We are going to cover the indictment and arraignment down this afternoon, I should say, in lower Manhattan. Our Kriti Gupta on the watch there. We have Maria Tadeo in Brussels, and a hugely historic day for Europe. But what we mostly have is within the Bloomberg surveillance wheelhouse, which is economic data coming out. And Lisa, I think we've underplayed this on Monday and into this many stories of Tuesday. The economic data begins today and launches towards Jobs Day on Friday.
Today's Jolts Tuesday. We're on Tuesday. Good morning. It is Tuesday. But we get the Jolts job openings at 10 a.m. And you're right. To me, this is beginning to be really important. How long can the market shrug off data that is coming in hotter than expected across the board and that still is really positive with respect to how tight this labor market is? Tom, to me, this is really the big question. Are markets getting it wrong? They've been badly wrong before and the Fed has been right. Is this just another example of that?
The big question is I got to get to Lisa's brief because that's smarter than what I'm doing. Let me do a data check here very quickly. Green on the screen, a resilient market yesterday, given news flow. Futures up 12, 41.65. I can't believe I'm saying this. Am I on the 4,200 watch on John Farrow's Standard & Poor's 500 index? Dow getting near 34,000. NASDAQ 100 up, I believe my eyes are failing me, up 0.5% as well. The VIX, as was mentioned by Matt Miller earlier, in under 19, 18.64. We mentioned the two-year yield again under 4%, under 3.5%. The 10-year yield, I missed that, 3.44%. Oil, the big story yesterday, rounded up $85 on Brent crude, getting near $86 a barrel. With a Washington brief, Lisa Abramowitz.
As we were just talking about, the economic data really front and center at 10 a.m. We get that February JOLTS job openings data. The expectation is for it to come in still above 10 million job openings, so still nearly 2 openings for every unemployed American. Hard to square this with the idea of an economy on the brink of recession. We also get U.S. factory orders and durable goods orders. I do want to note we're also getting a series of investor days, not only Credit Suisse, which we'll get to, but Walmart is also holding its first in-person investor day since 2020. That starts at 8. This almost is as important as the economic data because we might get more of a sense of layoffs and what the macroeconomic situation really is. At 2:15 p.m., President Trump, or the former President Trump, is getting arraigned in the criminal case in Manhattan with District Attorney Alvin Bragg. New York City plans to close off a number of streets. Honestly, my big question is, when does this move beyond the circus into something with much broader implications, or is this going to be very much the circus with all of the cameras coming into the courtroom, at least initially, as allowed by the judge? And today we do get Fed speak, including Boston Fed President Susan Collins, Fed Governor Lisa Cook, Cleveland Fed President Loretta Mester. Markets aren't listening to them, so it'll be really curious to see whether that continues. I'm also speaking with World Bank President David Malpass later this morning at an Atlantic Council event, kicking off next week's meetings. IMF, we're going to be down here, Tom, as well as the World Bank, setting a tone globally for a period that perhaps looks a bit different than some of the strength people are talking about in the U.S.
And as Walmart has a meeting today, it's really the symbol. And to me, the World Bank IMF meetings today really indicate moving beyond the pandemic. It's as simple as the buzz, Lisa, that I feel about what we'll see this week and next week in Washington.
We've been so concerned with former President Trump and all sorts of other smaller plot lines that some of the larger questions about China and what's happened there, some of the larger questions about Russia and its role in the crude market that we've been talking about over the past couple of days, very much front and center for both the IMF and the World Bank.
Right now, we are going to launch into an analysis of this market into the second quarter with all the different ups and downs, your failures, your successes in that tumultuous first quarter with Stephen Chivarone. Steve Chivarone has had a multi-asset solutions at Federated Hermes. Steve, what's changed in your market outlook from 12/31 to 3/31?
Not a ton. We remain cautious. I think what we've seen and what's emerged is the link between rate hikes and a slower economy. And it's the banks. It's the banks, and it's the banks linked to small businesses. With the pressure that's on deposits, we expect, and I think the Fed is looking for this as well, which is one of the reasons why you saw the caution at their last meeting, that's going to lead to a pullback in lending. And that really impacts small businesses, which employ 46% of the U.S. labor force. And it also is likely to impact the consumer as we go through the year, because the consumer really has used credit cards to offset some of the negative real income growth coming from inflation. And we think if that credit's pulled back, that's where you start to see the economy slow further.
In equities, then, where do you hide?
Yeah, so it's a nuanced view. One, defensive dividend paying stocks, especially after the fact that they've underperformed so far this year. We think that makes them altogether more attractive. But what I think has changed is, whereas coming into the year, we thought cyclicals were a little bit better bet than growth stocks, if you're headed towards a more significant economic slowdown, that safety, the strong balance sheets from some of the larger tech companies becomes a better place to hide. And so moving from kind of an underweight more towards a neutral weight in growth, we think will be appropriate, not necessarily at these prices. I'd like to see a little bit of a pullback in those growth stocks in order to do that, but we think that's going to be one of the next big trades for stocks.
Steve, you've been cautious for a while, along with a number of other people. How difficult is it to remain cautious as stocks continue to rally?
Yeah, I don't think what's happening here, Lisa, is all that out of the ordinary. I think we just misremember. So, for example, on average, between the low in the unemployment rate and the start of a recession, it takes 6 months. Well, we just hit the low in the unemployment rate a month and a half ago. We're not outside the historical norms. Over that 6-month period, unemployment doesn't rise that much, only about 0.2%. That's about what we're up. If you look at from the low in unemployment claims, that usually takes about 13 months or so to go from the low in unemployment claims for the start of a recession. Well, we're exactly at 13 months today. So I think what happens is people look back at prior cycles, and when you look at them on a chart, it's 2 inches. When you live through it, you realize it's 6, 9, 12 months sometimes. Same thing with bank failures, right? If you looked at the 08, 09 scenario, there were 6 months between Bear and Lehman. We don't remember it that way, but that was the case. And so I think things are progressing in a relatively normal period. If you look at this cycle, there was a recession, there was a robust fiscal and monetary response, it sparked inflation, the Fed's hiking, it's impairing lending. It's kind of proceeding along what might be the most classic cycle we've seen in our lifetimes, actually. Just, it takes time.
JP Morgan Asset Management, Bob Michael, he came out and he said, listen, right now, this is like spring cleaning. We want to get rid of everything we don't want. Perhaps there's going to be another quarter of rally. Perhaps you're going to see risk assets do really well in this second quarter. But after that, game over, and we want to make sure that we don't end up with stuff that we don't like. Do you agree? Do you look at this similarly as a time to kind of clean out specific names that you're not that interested in?
No, I think that's sound advice. In this battle between the market and the Fed, I think what the market's looking at, if you take a step back for a second, right, when was the last time you had a Fed that was hiking in an environment where you had an ISM at 46, when you had the entire yield curve trading below the federal funds rate, when you had this many yield curve measures inverted, when LEIs have been this negative, and when you have banking stress? The answer is never. Just like they were in unprecedented waters in not hiking in 21, they're really in unprecedented waters for not easing right now. Now, they can't because of the prior policy error. So when you look at that, I think being cautious and doing some spring cleaning probably makes some good sense.
Steve Chiavarone, thank you so much. Greatly appreciated today with Federated Hermes there with a reset on 2023. Lisa, I think this is fascinating. We make jokes about John. John's out on his roadshow, folks, with his March 31 outlook for the next 9 months. But I find it fascinating, Lisa, to go back to literally Investment Principles 101. We're in 5th grade. We don't know what we're talking about, sort of like surveillance every day. And it's real simple. Economy seems to be worse in the last 2 days, Lisa, and stocks go up. And I think that's just like a core concept that has to be addressed.
There are some people who say it's like weather forecasting, and there are people, when you hear that a hurricane is coming and yet the sun is still shining, that go out and stock up on canned goods. And then there are other people, the stock traders, who look around and say it's still sunny and there's a good chance that it could miss us, so you might as well enjoy the weather. And there's a sense that things are still good, and if you look on the ground, there is a lot of strength. So how do you parse the now with the predicted future that hasn't come to pass and that's been wrong for a while?
Talisa, in meetings in Washington with the World Bank and the International Monetary Fund, dollar weaker today, decisively weaker, Lisa, off of euro stronger. A lot of research writing this morning whether the euro through a 110, a stronger euro, a real mystery.
I would agree. That's actually something that's continued. But also we're hearing from ECB officials, they're still wanting to hike rates by 50 basis points, even as people price the Fed out.
Please stay with us. There are so many stories on this Tuesday. We'll have them all for you. Barbara Reinhardt with Voya next. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. There's never been a day like this in Manhattan. Former President Trump is in town to surrender to law enforcement officers, be booked, hear the charges against him, and enter his plea not guilty. The case involves hush money payments to a porn star during the 2016 campaign. New York City authorities say they're prepared for any disturbances. Oil has extended its rally following that surprise production cut by OPEC+. West Texas Intermediate was up after rising by more than 6% on Monday. The cartel's cutback prompted many banks to jack up their price forecasts. Federal Reserve Governor Lisa Cook says inflation in the U.S. has started easing, but she warns that price pressures could stay in place due to a tight labor market, the war in Ukraine, and the reopening of China. Cook said it will be important to watch how much more credit tightens in the wake of the bank turmoil. A top official at Switzerland's central bank says Credit Suisse would have gone bankrupt the next trading day if it hadn't been sold to UBS. Swiss National Bank Vice President Martin Schlegel called the merger the best among bad solutions. He says he doesn't see that financial stability in Switzerland is threatened in any way. And French skincare giant L'Oreal has agreed to acquire luxury cosmetics brand Aesop in a deal valued at $2.5 billion. Now, Aesop was founded in Australia and developed a cult global following. At L'Oreal, Aesop joins a cast of luxury brands such as Lancôme and Yves Saint Laurent. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business, Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority. Friday, we zero in on March jobs.
A much anticipated jobs report.
The data are lagging and they are all over the place.
Fed tightening has consequences.
This Friday, it's a special Good Friday edition of Bloomberg Surveillance starting at 7 a.m.
What's the tea leaf I should be watching?
Do you think that this is an accurate response to the report that we just got?
You can't react to every bit of data.
The special Good Friday edition of Bloomberg Surveillance, Friday starting at 7 a.m. Eastern, leading up to the jobs report at 8:30.
This is his fondest dream come true. He's on the front pages of every newspaper. He gets to play martyr, and he's really, really good at playing martyr. And yeah, the circus is in town in New York, and this circus is going to persist not for weeks or months, but maybe for the next couple of years. Trump can stretch this out into the election campaign of 2024.
Greg Villiers, he's been of such benefit to us with AGF Investments, just his perspective of linking our economics, our political economy into the political moment. Lisa Bramwitz in Washington. I'm Tom Keene in New York. John Farrell is off today. Really looking forward to getting him back for this busy economic week we have. We've really underplayed, beginning with the JOLT survey today, folks, the economic data we're going to get. And as Lisa and I mentioned earlier, the hallmark data point for you waking up across America, 3.99% on the 2-year yield, this off of softer GDP analysis summed by the Atlanta GDP now statistic from a 3-ish down to under 2%. Right now, to dovetail the many threads of this Tuesday in is the right person. Vinja Murray joins us, head of U.S. program at Chatham House. And I really, as you do in your wonderful research note, Leslie, I think we can dovetail this in away from the indictment, the arraignment, and all the rest that America's following into the fragility that Europe feels about this moment in America. We have Finland joining NATO. Folks, in my life, I never thought I would say that. That's how unusual that is. Finland's joining NATO, and there's a lack of European confidence over the future of America's support of Europe, looking from Biden on to whatever we see in the next term, which could be another President Trump. I mean, it's a fragile time for Europe as well.
It is. I mean, there's been tremendous confidence that Europe has had in the United States on the back of the invasion, for well over a year now. But lurking in the background is, what comes next in the United States. I think Europe hasn't really taken concrete steps to deal with this. But if, as you're sitting in the corridors of power everywhere, I think in Europe, across Europe, there is a real concern whether Donald Trump is coming back, whether the Trump wing of the party is coming back. And that matters for Europe because it's taken as a sign that Europe won't be as committed to NATO if that the United States wouldn't be as committed to NATO if that were to pass. And we all know that it's really U.S. Military support that has saved the day when it comes to the war. So I think for Europeans, it's a very real concern when they look back. They don't really understand the focus of what's happening today necessarily. They don't understand the significance. I think for Europeans, it's much more about, the Capitol attacks, the attempt to obstruct the election. But there is an existential question. What comes next in the United States? It matters for Europe a huge amount.
Give us an example of what a second-term President Trump would do in Europe. I mean, what does he do with Poland or Estonia, the new Finland? I mean, what's something that he would adjust or amend from what President Biden's been doing?
Well, I think for the Europeans, the real concern is that Donald Trump would go back to that sort of language and rhetoric that he used throughout his presidency, which is why are we doing this? Why do we care?
Not the language and the rhetoric. We know the president is fine. We may see language and rhetoric today, folks. Kriti Gupta is downtown at Center Street. Okay, fine. We may see language and rhetoric. But what would be the action of a second-term Donald Trump?
Yeah, well, this is the big question, Tom. Nobody knows, but what the real concern is that the action is that you don't get that military aid, that the United States really does pivot, focus most of its attention on China, puts much more pressure on Europeans to support its policy, that comes at a price. And that support, remember, for Europe, this war is existential. That border is right there. It's regardless of what happens in the months ahead, there's going to be instability. The perceived need for the United States to be right there firmly behind is concrete. And they look back at a Republican Party that's saying all sorts of things about what they would or wouldn't do, about whether or not the war is worth America's interest. And the real fear is that Donald Trump would actually consider scaling back that support and potentially pulling the United States out of NATO. It seems very difficult to imagine given the last year and a bit, but it's certainly the concern. And there's no reason not to have that concern given the mixed messages that are coming out of the Republican Party.
Leslie, have there been policy consequences of this? Basically, this idea that the rest of the world is moving away from U.S. leadership in concrete ways amid the crises of whether we're talking about Russia's invasion of Ukraine or other potential risks looming out there.
I think we've got a frozen mic there right now. We'll try to get the technological worked out here in a moment. I look I look, Leslie, at where we are and what we're going to see today from Trump, and let's bring it back to what we're going to actually envision today. You've been a student of domestic politics for years, and you're in my lifetime. This is original.
It is original. We've never seen an American president indicted in this way. I think the real question is, nobody knows what's in that indictment. We'll have to wait and see. And how will the public react? Right now, it seems like many Americans feel like this is that there's an element of politics. We know this is in a very polarized context that this is taking place. Europeans are looking back. They are struck time and again at the divisions. And in many ways, the interesting question is, how does this play in the court of public opinion? How do people react to whatever comes out today? What significance does it have? Does it become a real thing? Or is there violence on the streets? Or does it sort of fade into the background because people are growing tired of this kind of politics in the United States?
Well, the politics is there and the rhetoric is there. What I find fascinating is both sides establishing a middle. Joe Biden seems to be working against a liberal Democratic Party. There's this, there's that, it's literally choreographed out of the White House. And then you've got the basic Republican response, which is the 46th governor of Arkansas with a 1% polling rating, has decided to jump into the presidential race. Where's the center?
Really hard to find the center. This is the problem when you see that sort of the Democratic Party, as you just said, kind of pulling apart. But again, if you look at this from the perspective of the rest of the world, America's foreign policy at the moment looks pretty bipartisan on the big issues. And Tom, that's not necessarily a good thing for much of the rest of the world. There's a real concern that division between the United States and China is going to put many countries in a position where they have to choose, where it's going to force hard economic choices. So bipartisanship, we might applaud it at home. It doesn't always look like a good thing from the point of view of the rest of the world.
I got to pull an audible question here. I get to do this because I've been doing it for so long. What did you think of the King of England walking across to the Brandenburg Gate the other day? Wow.
An extraordinary moment, of course. I mean, this is symbolic politics, I think, in the current moment are not to be underestimated. We're seeing them time and time again. We're seeing a West that looks so strong in many ways. But again, as you look forward to the months ahead, I think there's a real concern of what comes next. And one has to be cautiously optimistic about the optics about the West, but also aware that the fissures are likely to develop.
We look forward to seeing you in London again. Leslie Vinjamuri with us with the London-based Chatham House this morning, and it really indicates the threads that are out there. It's amazing, Lisa, I can't recall a day in recent memory where